Hi, CA Intermediate students. I hope you are doing absolutely fine. This is a special exam day marathon for you, which will cover chapter number 1, chapter number 11, chapter number 2, and chapter number 6, around 35 marks weightage. I will be taking up all the revision sessions with my handwritten notes. You can find that in link free resources link on our website sakshamjain.org. I will give that in description and comment section. When you are watching this lecture, don't speed up. Watch at one speed. Try to recall the points. Try to recall the points with the lecture. Simply watching the lecture will not help you. Watch and recall the points. Whenever you are done with any of the chapter, for example, let's say chapter number 1 will take around 1 hour. So whenever you are done with chapter number 1, pause that video and revise on your own again. Give 1 or 1.5 hours again. Fine. If you are using this exam day marathon at in 1.5 days, obviously you will not get so much of time. But if you are using this exam day marathon specifically in second revision, you can do this. Fine. This marathon will help you to actively recall all the concept. We will be taking all concept nicely. We'll be focusing on the MCQ pointers also, specifically in chapter number 11. So this will be a game changer marathon for you. Use this. Don't speed up the lecture. Ultimately, it will not help you. Simply watching will not help you. Need to do a active recalling with me altogether. Sir, can a person who is more comfortable in Hindi can watch this? Obviously, yes. If you're comfortable both in Hindi and English, you can watch this, because ultimately keywords are to be retained, are to be written in English only. So you can watch this, you can use this definitely. So all the best. Take best benefit of this lecture, and I'm damn sure you will be scoring exemption in audit. Do make sure you are liking this video and also share your feedback, because this is our first revision video in English. So do share the feedback. Thank you so much. All right, people, let's start our revision with chapter number 1, nature, scope, and objective of audit. Generally, examiner tends to ask this chapter of around 4 to 6 marks. First topic is meaning of auditing. You will not find a clear cut definition, a clear cut direct question for the definition of auditing, but you should know, and obviously many students tend to remember this definition. So what exactly is auditing? Basically, X limited management is the person who runs the business, who prepare and present financial statement. Yes. Shareholders are actually the owners of the entity. So what basically shareholder do? Shareholder appoints auditor so that he can conduct audit. He can conduct audit. Got it? Now auditor, who is auditor? Auditor is generally CA in practice. A chartered accountant who is doing practice is eligible to do audit. Got it? So what is definition of audit? Audit is basically examination. Examination of what? Of financial information of any entity. Examination of financial information of any entity. An auditor do examination just to give an opinion thereon. Ultimately, he has to form his opinion, and in his audit report, he gives opinion. Opinion is of two types: unmodified and modified. Got it? What is examination? Detail checking. Detail checking of what? Financial information. Financial information is like balance sheet, P&L, cash flow, notes to account, accounting policy, etc. of any entity. Whether entity is profit oriented or not. Entity structure is small and small, medium, large, or it's any form, legal form, individual, partnership, company, irrespective. Auditor do examination of financial information and give its opinion. And mind it, auditor should always be independent. So what is the exact definition of audit? Examination of financial information of any entity, irrespective of size, legal form, profit oriented or not, just to give an opinion thereon. And one important word which you will always be mentioning in your answer: independent examination. Got it? Opinion is of two types: unmodified and modified. Auditor gives opinion in writing, that is, he gives an audit report as per SA 700. Clarity? Then, what is objective of audit? Very important. This can be asked in your exam with the linking of inherent limitation of audit. I will be taking that question. Objective of audit. Basically, auditor has to give an opinion, and he has to give opinion in writing. Yes, this is our two objective. But in exam, obviously, you cannot specifically write this directly. You need to give little thesis, little keywords so that you can score 4 out of 4. So what is objective of audit? Objective of audit has been given first in essay 200. You don't need to remember the essay 200 name, and you don't need to quote essay name also. No marks are awarded for particularly quoting and naming whole standard. No marks are there for you. So I am directly switching to objective of audit. What is objective of audit? First opinion, to give an opinion, but write properly. To obtain reasonable assurance. To obtain reasonable assurance about what? Whether financial statement are free from material misstatement. Always remember, misstatement has two brothers: material, error, or fraud. So write like this only: to whether financial statement are free from material misstatement, whether due to error or fraud. Thereby, auditor to express an opinion on financial statement on whether FS are prepared as per applicable FRF. When you are giving the objective, explain keywords also. What is reasonable assurance? What is reasonable assurance? Reasonable assurance is basically not a 100% guarantee. Sir, why auditor cannot obtain 100% guarantee? Because there are inherent limitation of audit, which we will be discussing later on. There are inherent limitation of audit. That's why auditor cannot obtain 100% surety, 100% guarantee. But auditor obtains reasonable assurance. And what is reasonable assurance? A high level of assurance. Sir, why auditor is able to obtain high level of assurance? Reason being, he is a professional, competent person, and he is doing audit on the basis of standard on auditing. These are the 2 points which you will be writing to give the reasoning of high level of assurance. So first word should be clear: to obtain reasonable assurance. What is reasonable assurance? Sir, it is a high level of assurance. Why high level of assurance? Because a professional, competent person is doing audit on the basis of standard on auditing. Sir, why not an absolute assurance? Not a 100% guarantee because of inherent limitation of audit. Got it? This is the basic point. Up to obtain reasonable assurance about what? Sir, whether financial statement are free from material misstatement due to error or fraud. Thereby to express an opinion. Got it? Whether FS are prepared and presented as per applicable FRF. Now let's discuss some key words here. What do you exactly understand by the word misstatement? Remember the short trick ACP Daya, ACPD. You can remember like this only: ACP Daya or ACPD. Amount, classification, presentation, disclosure. Amount, classification, presentation, disclosure as required by the AS Indies, that is your applicable FRF, and as reported by the entity. Giving you one example: closing stock has to be valued at lower of cost or NRV as per the AS2, but entity has valued at higher of cost or NRV. This is what the difference between what is required to be reported as per applicable FRF and what is actually reported by the entity. If there is any difference in amount, classification, presentation, disclosure, that is what misstatement. That is what misstatement. And misstatement can be unintentional, intentional. Obviously, intentional ones are more trickier. Got it? Misstatement definition you will be remembering. So please repeat: ACPD, ACP Daya, ACP Daya. Amount, classification, presentation, disclosure. Difference between amount, classification, presentation, disclosure as required by applicable FRF and as reported by the entity. So what do you mean by applicable FRF? What do you mean by applicable FRF? Basically, a framework used by entity, that is client, to prepare and present financial statement. For example, AS Indies. No need to learn exact definition, but a common sense framework used by entity to prepare and present financial statement. Got it? Got it? It can be AS, it can be Indies, it can be as per Schedule 3. And obviously, misstatement should be material because auditor gives opinion depending upon the whether the financial statement are materially misstated or not. For example, if we link financial statement are materially misstated, try to do active recalling and don't speed up lecture. try to watch at 1 or 1.1 or 1.2 max. Financial statement are materially misstated. Answer is yes. Answer is no. If yes, then auditor gives modified opinion. If answer is no, then auditor is giving unmodified opinion. Clarity, right, sir? Then materiality applicable FRF. This is your first objective. Repeat first objective with me. So what is the first objective? To obtain reasonable assurance about what? About whether financial statement are free from misstatement is a two keywords. Material misstatement, whether due to error or fraud, thereby auditor to express an opinion whether FS are prepared and presented as per applicable FRF. And second objective is to report on financial statement. Auditor do not give his opinion on orally. He report on financial statement plus communicate as per essay according to your findings. This is your main understanding. If financial statement are free from material misstatement, answer is yes, give a unmodified opinion. If answer is no, give a modified opinion. Fun here also we have written this only. Got it? Clarity. I hope things are pretty much clear. Now, institute can also target this small topic. When you are examining, make sure that you are examining in such a way that financial statement would not mislead users. This is a direct question which was asked in September 2025. Focus here. When auditor is examining, he should make sure that financial statement should not mislead user. How he will be making examination? He will make sure that accounts are drawn up with reference to the entries. Obviously, as per the entries in the books of accounts are finally drawn up. Then connect 2 points with entries. No entry omission. Financial statement should not omit any entry, and every entry should have supporting sufficient appropriate evidence. For example, if sales entry has been done, it should have a supporting documents like sales invoices, order of customer, etc. So 3 points are related to entries. Auditor examine that accounts should be drawn up with the reference to the entries. No entry should be omitted, and entries should be supported by sufficient appropriate evidence. Got it? 3 point. Fourth point, information conveyed by the financial statement should be very much clear, should be very much unambiguous. It should not create any confusion. And fifth point, financial statement amount should be properly presented, disclosed as per applicable FRF, that is AS, IND-AS. And last point, if these points are satisfied, obviously you can write 6 point also. Statement of account shows a true and fair picture of asset and liability and business operation. A statement of account should present a true and fair picture to users. For example, if debtor is bankrupt, provision need to be made to present a true and fair picture of asset and liability and business operations. Is this clear to you? Let's recall everything, whatever we have covered till now. Define audit. So what is audit? Independent examination. Examination of what? Financial information of any entity, irrespective of size, legal form, profit oriented or not, just to give an opinion thereon. Opinion is of two types: modified opinion and unmodified opinion. So what is objective of audit? Objective of audit has been governed by Asset 200. Don't bother to write the name also. No marks are there for you. Two objectives are there. To obtain reasonable assurance about what? About whether financial statements are free from material misstatement, whether due to error or fraud, thereby to express an opinion whether FS are prepared and presented as per applicable FRF. Active recalling. Second, to report on financial statement and communicate as per your auditor's findings. Obviously, do give also the analysis. Why reasonable assurance only, sir? Because auditor cannot obtain 100% absolute assurance, inherent limitation. Why reasonable? High level of assurance. Professional competence person is doing audit on the basis of standard on auditing. First point is clear. Give the little bit explanation of misstatement. Definition of misstatement. ACPD, amount classification presentation disclosure. Difference between amount classification presentation disclosure as reported by the entity and as required to be reported by the entity. Are you getting my point? In doing examination, auditor has to make sure that financial statement would not mislead user by 3 points are related to entries. No entry should be omitted. Entry should be supported by sufficient appropriate evidence. Account should be drawn up with the reference to the entries. 3 points are there. Fourth point, financial information should be clear, unambiguous. A statement of account should present a true and fair picture of a certain liability business operation. And one more point, financial statement amount should be presented, disclosed as per applicable FRF. Are you getting my point? Are you getting my point? Done, sir. Then there is a basic topic of nature of auditing, interdisciplinary nature with diverse subject. Honestly, don't try to cram up this topic. Don't try to do ratification of these topics. Just have a basic knowledge. For example, auditing and accounts are closely related. Auditing and accounts are closely related. Sir, how? If you want to do audit, you should have a thorough knowledge of audit. You should have a thorough knowledge of accounts. That only on the basis of knowledge of accounts you will be able to identify misstatement. Got it? Without financial statement knowledge, you cannot do audit. They are both closely related. Sir, auditing and law is very close. Obviously, a law which have a direct effect on financial statement. For example, taxation and business law, auditors should have a great knowledge of that. It is very important for auditor to have a essential knowledge of laws which are impacting financial statement directly or it may be indirectly. GST laws, income tax laws, company law, you should have a good knowledge. So that on the basis of knowledge, you will be able to identify whether entity is complying with the applicable laws and regulations. Got it? Got it. Yes, sir. So connect with basic common sense, accounts, law, financial management, economics, costing and production, human behavior. Client provide you data. Yes, sir. Understand client psychology to get data from client on a timely basis. That is the basic logic of human behavior. Got it? C category topic basically. Then let's move towards another topic, scope of audit. Basically, scope of audit, there are two category: inclusion in the scope of audit, does not include. 3 points are there for inclusion, 4 points are there for does not include. Clarity? Clarity, sir? Yes, sir. So first focus on inclusion aspect. Inclusion is a coverage of all aspect of entity. Auditor cover all aspect of entity which are relevant to financial statement being audited. For example, financial statement, auditor examine internal control, auditor examine whether laws and law regulation compliance has been done. So everything which is relevant to financial statement being audited, auditor covers. Coverage of all aspect of entity relevant to financial statement being audited. Got it? Easy. Second, reliability and sufficiency of financial information. Understand this part. Information, financial information is contained in accounting records and other records. Yes, sir. Sir, auditors should be satisfied, reasonably satisfied, that the information which are contained in accounting records and other records are reliable and sufficient basis for preparation of financial statement. So, who prepares financial statement? Management. Got it. Auditor should be reasonably satisfied that the sir information contained in two things, accounting records and other records, these are covered in SA 500, is reliable and sufficient basis. Auditor makes sure that this financial information is reliable and sufficient. Sir, how auditor assess that the financial information is reliable and sufficient? By examining internal control, by examining accounting records, by performing appropriate test, audit procedures, etc. Auditor do this on the basis of sampling basically. So, what is the scope of audit? Basically, financial information is contained in accounting records and other records. Auditors should be reasonably satisfied this financial information is reliable and sufficient. So, our auditor makes sure that this information is reliable and sufficient by examining accounting records, internal control, etc. By performing audit procedure on them. Are you getting my point? Please connect all the points so that you can write properly in exam. Got it? Third point, proper disclosure of financial information. Specifically, two questions can be asked relating to this topic, proper disclosure of financial information. Let me give you thesis. Suppose you are doing audit of X Limited. X Limited has got notice from, let's say, a particular department indicating a non-compliance with laws and regulation that can lead to heavy monetary penalties. X Limited has not made any provision. X Limited has not made any disclosure. Got it? We as auditor uh, ask management, you have not made any disclosure or provision liability relating to particular notice. Management told us, sir, this is not in the your scope of audit. This will be the full case study in your exam. So we say proper disclosure of financial statement has to be done by the management, right? Preparation, presentation has to be done by the management. Disclosure has to be done by the management. Yes, auditor examine whether management has done this or not. So this is our in the scope of audit. Now, write these 3 points to get full marks. Auditor has to make sure that financial statement are properly disclosing financial information. All disclosures has been done, comply with the applicable FRF, and summarize transactions and event accurately. Repeat: financial statement comply with the applicable FRF, comply with the applicable statutes, properly disclose financial information, summarize transactions and event accurately. Basically, P&L, balance sheet are summarized record of the transactions which have happened in the whole year. So, auditor to make sure that financial statement comply with the relevant applicable FRF, relevant applicable statutes, properly disclose financial information, summarize transactions and event accurately. Got it? Got it? Then, tell me one thing. Financial statement preparation has to be done by the management. Obviously, it involves judgment which is subjective, which is uncertain. For example, choosing of appropriate accounting policy. Yes, so preparation of financial statement, it is the responsibility of the management. It involves judgment which is subjective, uncertain. Give one example, that accounting policy. Choosing of accounting policy, it is the responsibility of the management. Auditor, what does? Auditor evaluates whether selection and application of accounting policy is consistent, is appropriate, and if changes are made, whether they are properly accounted, presented, disclosed. Are you getting my point? Financial statement preparation, choosing of accounting policy, management responsibility. Auditor evaluates whether management are going in the right direction, basically. So these 3 topics are in the scope of audit. Got it? I have connected you with the case study that can be asked in your exam. One more question specifically can be asked relating to accounting policy, whether evaluation of accounting policy falls in the scope of audit. Yes, yes. Management choose accounting policy, select and apply. Auditor evaluates whether selection and application of accounting policy are appropriate. If changes are made, if they are not consistent, whether accounted present, whether the different, whether the change is accounted, presented, disclosed as per applicable FRF. Got it? Got it? So these are 3 important point. Let's move towards does not include segment. So the inclusion is important. 3 points. Specifically, C point is very important for your examination point of view. Now let's focus on the does not include part. Does not include. First is responsibility of preparation presentation of financial statement. Tell me, who has the responsibility of preparation presentation? Some management. Yes, this is not in our scope. Duties outside the scope and competence of auditor. We are not expert in authentication of document. We are not here to verify that the particular document is authenticated. We are not here. We are not expert on that. And audit is not investigation. I will tell you the difference between investigation and audit. So 4 things are there. Duties outside the competence of auditor. We are not expertise in authentication of document. We are not responsible for preparation presentation of financial statement. Got it? And audit is not investigation. There is a huge gap between audit and investigation. Are you getting my point? Are you getting my point? Audit versus investigation, generally examiner tends to target. I will be giving you 2 case studies. I will be connecting you with 2 case studies where examiner will be giving you in exam. You need to identify and you need to write your thesis to secure 4 or 5 marks in your exam. So first, case number 1 and case number 2. Understand this. There will be 2 cases. CA appointed to detect fraud. If chartered accountant has been appointed specifically to detect fraud, this is not audit, this is investigation nature. Auditor ultimate objective is not to detect fraud, but ultimate objective is to give an opinion whether FS are prepared and present, whether FS are free from material misstatement or not. If chartered accountant is specifically appointed to detect fraud, so this is investigation, not audit. This is investigation. Got it? Second question that can be asked in your exam. I'm not covering each and every question of audit decoder, just connecting you fast because this is a revision video. Got it? So second question that can be asked: insurance company, suppose there was a fire destroyed plant premises of a particular, let's say, X Limited. Insurance company appointed a CA to investigate what actually happened on plant side and present a report. So this is again not an audit. This is again a nature of investigation. Two questions will be, any of the question can be asked in your exam. How to write answer? Sir, you have to write 4 points specifically. 4 points specifically, and then give the fact of the case and conclusion part. 1 mark will be awarded for every 1 mark written correctly. Got it? Got it? So connect. So what are the 4 points? First, define investigation with example. So what is investigation? So investigation is a critical examination of account with a special purpose. For example, CA was appointed to detect fraud. So this is what a critical examination of account with a special purpose to detect particularly fraud. This is investigation. In second point, give the objective of audit. You know the objective of audit to obtain auditor. However, in case of audit, auditor has been appointed to obtain reasonable assurance about whether financial statement are free from material misstatement due to error or fraud, thereby to express an opinion whether financial statement are prepared and presented as per applicable FRF. Objective of audit. Then third, investigation is very specific. Investigation is very specific and narrow. Audit is general and broad. For example, investigator was appointed to specifically check the debtor's account to detect fraud. This is very specific and narrow. So audit is very general and broad. Got it? And fourth point, generally investigator has lot of power. For example, legal search, legal power of search, recording statement of witness on oath. Generally auditor do not carry such powers, but investigators generally have such powers. Are you getting my point? Are you getting my point? So this is an audit decoder book, a well drafted decoder book, and you can do this. This PDF is available on our Telegram channel. You can do question number 3. Question number 3, topic number 5, scope of audit. Question number 3. I have already given you overview of the topic. So audits versus investigation. Give me 4 points. First, you will be defining investigation. Investigation is a critical examination of account with a special purpose. Give the example of fraud. CA appointed to detect fraud. This is example, classic example of investigation. Second, objective of audit to obtain. You know this. Third, audit is general and broad. Investigation narrow and specific. And fourth, auditor does not carry powers like search, legal search, or recording statement of witness on oath, but investigator generally carry these powers. Clear? Are you able to connect with me? I hope you are matching my speed because this is a clear cut revision video, and I'm specifically designing this revision video so that you can revise on your 1.5 days, specifically exam day marathon time. Got it? And now let's move towards another topic, benefits of audit. So what exactly are the benefits of audit? This is a very much direct question. Just remember the key shareholders. Basically, let's connect with the key shareholders. Benefits of audit. For example, lender and benefit, lender and banker. They generally can take a informed credit decision on the basis of audited financial statement. Yes, sir. It will help government authorities to assess tax liabilities. Fine. Employees will have a moral check, will have a moral check, and there will be deterrent to commit any fraud. Got it? Got it? Right, sir. Lenders and bankers, government authorities, employees. Government authorities, tax liabilities. Lenders and banker, credit decision. Employees, they will be able to audit will deter fraud by keeping moral check on employees. Got it? Clarity. Audit is done on the basis of the standard, on the basis of the global standards. right? So it ensure high quality, reliable financial information by adhering to global auditing standard. It increase user, it boosts the confidence of the user. In audit, auditor understand internal control, auditor test internal control. So it evaluates internal control, communicate weakness, communicate deficiencies for areas of improvement. Auditor may also help to detect error and fraud. This is a basic benefit of the audit. Clarity, and obviously shareholder don't take a routine participation, but they will get more confidence. They will be relying on audit for reliable financial data as management prepare financial statement. So remember the key shareholders, basically lenders and bankers, credit decision, government assessing tax liability, employee, they will not be committed, they will be deteriorating from committing fraud. Moral check will be there on them. Shareholders will rely on audited financial statement because management is the person who prepares financial statement, evaluate internal control, communicate weaknesses, and a basic point, auditor helps to detect error and fraud. Clarity. I hope things are pretty much clear to you. Then let's focus on another point, quality of auditor. Basically, quality of auditor, I will be connecting this answer with our chapter number 11, ethics and independence, as we are in a revision. Basically, connect quality of, when you, if examiner is asking you about the quality, you cannot, you will always be writing good things only, right? So connect ethics principles, independence word in your answer. What are the ethics principle? Confidentiality, CPIPO cannot place IPO, confidentiality, P for professional competence educator, integrity, professional behavior, and objectivity. Connect with the independence word. Auditor should always be a tactful person, a careful person, should maintain professional skepticism, be alert to situation, give all the good attributes of a human being. Are you connecting with me? Give all the good attributes. He should be tactful, he should be cautious, he should make an informed decision making, everything you like. He should be trustworthy, he should maintain the integrity of the data obtained from the client. He should maintain the independency, he should comply with all the 5 ethical principles, CPIPO. Got it? Quality of auditor. Rarest of rare attempt, examiner will be asking you this question. You don't need to do all questions rectification. Are you connecting with me? Then there is one extra gyan for you. Basically, auditor apply audit procedure. Auditor apply audit procedure. Sir, audit procedures like inquiry, inspection, observation, recalculation, reperformance, external confirmation, ethical procedure. Sir, auditor apply audit procedure to gather audit evidence. To gather audit evidence, ultimately to form conclusion whether financial statement are free from material misstatement or not. If financial statement are free from material misstatement, okay, everything is good, unmodified. If financial statement are not free from material misstatement, okay, serious thing, modified. This is your basic concept. Then audit evidence, SA 500. Information is contained in accounting records and other records. Auditor obtains evidence and that evidence should be sufficient and appropriate. What do you mean by sufficiency? Quantity of audit evidence. What do you mean by appropriateness? Quality of audit evidence. Got it, got it, got it, got it, got it. Now let's focus on another topic, inherent limitation of audit. If you are able to match up with my speed, because this is a revision video specifically designed for your exam day marathon, exam day revisions. If you are able to understand, do share in comment section and make sure you are liking this video and share it with your friends who are facing difficulty in audit. I want to make sure that a good quality content is reached to our South Indian students also. This is our initiative for South Indian students. Do share with your friends who are worried about audit subject, as specifically this is specifically designed for them. Yes, students who are both comfortable in Hindi and English, obviously they can watch this lecture, they can take benefit of these sessions. Separate revision series are specifically designed for students who are comfortable in English language. But now I have taken this initiative for South Indian students also, so that they can get maximum benefits and score exemption in audit. And obviously my motto is just to provide a good quality content. Got it? Now let's focus on another topic, inherent limitation of audit. Basically, I connected with you that auditor cannot obtain 100% absolute assurance because there are inherent limitation of audit. Yes, sir. There are inherent limitation of audit. There are 5 inherent limitation of audit. There are 5 inherent limitation of audit. First is nature of financial reporting. Nature of financial reporting. Connect with the heading. Financial reporting, accounting. Who do financial reporting? Who do prepare a financial statement? So preparation and presentation of financial statement is done by the management, which involves judgment. Because, for example, to make provision, management takes a judgment whether to make a provision of 10% or 20%. Yes, sir. So preparation of financial statement, connect how to write the answer. You will be able to understand. Preparation of financial statement has to be done by the management, which involves judgment, which is subjective and uncertain. That's why auditor is saying if management has to take a judgment, therefore auditor says I am not, therefore auditor not able to obtain absolute assurance whether financial statement are free from material misstatement or not. You are able to understand the reason because it involves judgment. Financial statement preparation involves judgment. For example, fair value calculation. How could you think auditor can give absolute assurance then? Got it? So try to get a great conceptual clarity so that you are able to write properly. Preparation of financial statement has to be done by the management, which involves judgment, which is subjective, uncertain. Therefore, auditor may not be able to obtain absolute assurance whether FS are free from material misstatement. One of the basic assumption of audit, one of the basic premise of the audit is that management understand their responsibility, acknowledge their responsibility for preparation and presentation of financial statement, for devising internal control. It is the responsibility of the management. However, there may be case where internal controls are not operating properly. For example, collusion among people. So how can auditor give absolute assurance? Got it. Specifically, institute can draft one question relating to collusion among people and linking with the objective of audit. Let me connect with you. Suppose purchase department, internal controls are there, and let's say Raju is a person who checks goods quality whenever they have received from the supplier at the factory gate, and if he's satisfied with the good quality, he sends invoice to the payment department. But let's say there was some collusion among employees and suppliers, and Raju up allowed fake invoices. No goods were received, fake invoices was created, and payment was made to a fake vendor. This is a clear cut example of collusion among people. Yes, sir. If you see the audit decoder question number 2, audit decoder question number 2, or let's say inherent limitation topic. Inherent limitation topic. This is a question number 3, classic question number 3. ICI asked this question to explain objective of audit, why auditor can provide only reasonable rather than absolute assurance in the context of the given situation, and ICI give the whole situation like this. You know the point. You know the point why auditor can only give reasonable assurance, because sir, there are inherent limitation of audit. He cannot give absolute assurance, inherent limitation of audit. And if ICI has given example, ICI gives example relating to collusion among people, the context of the given information, you will be approaching by giving objective of audit and also the inherent limitation nature of financial reporting. Are you getting my point? Nature of financial reporting. Explain the content here. Financial reporting. Sir, financial statement preparation presentation has to be done by the management. Yes, sir. It involves judgment. Yes, sir. Which is subjective, uncertain. Therefore, auditor may not be able to obtain absolute assurance whether financial statement are free from material misstatement. Got it? One of the basic assumption is management understand, acknowledge their responsibility of preparing financial statement, of devising internal control. What if internal controls are not operating properly? Example, collusion among people. ICI will be giving example of collusion among people. He will be referring to inherent limitation, objective of audit, and that is a very comprehensive question. Clear? Nature of financial reporting is clear to you. Are we done? Can I move forward? Then comes the part of nature of audit procedure. So basically, auditor apply audit procedure to obtain audit evidence, to form conclusions. But sir, there are some PL, there are practical and legal limitation. There are practical and legal limitation on the auditor ability to obtain evidence. Give example of practical limitation, give example of legal limitation. So what is practical limitation? You understand the thought process. Sir, auditor cannot test 100% transaction. He do audit on the basis of sampling and draw conclusion on the whole population. That is his practical limitation. Auditor does not test all transaction balance. He forms his opinion only by testing samples. This is a practical limitation of auditor. Legal limitation. Auditor collect data from client. Yes, sir. There may be a case where management may not provide complete information to auditor, and auditor cannot do WWE with him. Auditor can only report. He cannot. He cannot force management to provide. He can only report. This is a legal limitation. Yes, you may provide modified opinion. That is okay, but there is a legal limitation. Got it? Example of practical limitation. Example of legal limitation. This is relating to nature of audit procedure. You are getting troublesome in obtaining evidence only. Why? Because of practical and legal limitation. Example you should remember. Got it? There are some other miscellaneous point also. For example, related party relationship and transaction. Always remember, related party relationship and transactions are often complicated. An auditor may not be able to trace related party relationship and transaction. We are not here to verify authenticity of document, right? There may be a case where management may provide fabricated documents. An auditor may apply audit procedure on that fabricated document. There may be a case of collusion among people. Fraudulent, sophisticated schemes are run by the employees management. Auditor may not able to detect them. There may be a cases of non-compliance with laws and regulations. Are you getting my point? Are you getting my point? Very important for your exam. Got it? Then, two disadvantages, two inherent limitation: nature of financial reporting, nature of audit procedure. Focus on the main heading, you will be able to connect everything. Then third, not in the nature of investigation. This is already been covered. Fourth, timeliness of financial reporting and decrease in relevance of information over time. For example, whatever the information auditor has obtained, its relevance get decreased by over a period of time. Got it? For example, auditor do testing of internal control in 1 year. Got it? He wants to rely on that information in next year, but what if internal controls have been substantially changed by the management? That is the limitation. Timeliness of financial reporting and decrease in relevance of information over time. And you know, if relevance of information decrease over time, an auditor obviously have limited time to do audit. That's why inherent limitation is created. Obviously, always remember, auditor cannot give excuse of time or cost that I cannot apply a particular audit procedure because it involves a lot of cost. He cannot give such excuses. Clarity, right? And fifth point is related to future events. Future events may affect business adversely, affect ability to continue as a going concern. For example, let's say a auditor gives a clear-cut opinion on the financial statement. After 2 months, business got bankrupt due to, let's say, you remember COVID, business got bankrupt. Shareholder telling auditor, you give the earlier clean opinion, and business got now business got bankrupt, sir. What is your opinion value? We are giving, sir, this is my inherent limitation because I cannot predict future events. So future events can disrupt business adversely. There may be a change in technology. There may be emergence of new competitor. We cannot predict future. We are not Krish. Are you getting my point? So there are 5 limitations of audit. I give a mnemonic na. If you can understand a little bit of Hindi, na time niye future banana hai. Na time niye future banana hai. Na nature of financial reporting, na nature of audit procedure, na not in the nature of investigation, timeliness of financial reporting and decrease in relevance of information over time, and future event. If you remember, if you know a basic Hindi, you will be good to go. Clarity? Done, sir? Can we move forward? Yes, sir. Now let's focus on very basic topic: appointment and report submission. auditor has to submit his report to a person who has made his appointment. Simple. Report submission has to be done to a person who has made your appointment. In case of companies, generally you are appointed by shareholders. In case of partnership, you are generally appointed by partners. Submit report to a person who has made your appointment. Very simple, very basic. Sir, is audit mandatory or voluntary? Always remember from MCQ point of view, for companies, audit is mandatory. Always remember, for companies, audit is mandatory. So for other entities, auditor can do voluntary also. If a entity has to compliance with tax audit, then as per income tax, if conditions satisfied, then entity is liable for tax audit also. Then it gets mandatory. But for companies, statutory audit is compulsory, mandatory in any case, whether you are a small company, whether you are medium company, whether any company. However, certain relaxation will be getting imposed for some smaller companies. We will be seeing that amendment in future whenever it comes. I hope you are able to make up things. Now, let's focus on another topic, assurance engagement. Can I move forward? Assurance engagement? Or you can simply take a 2 minutes break and then again start, so that you are watching with fresh energy, because this is a most important topic, assurance engagement. Yes, people. So let's do the discussion of most complicated topic of chapter number 1, but you will find very easy, assurance engagement. Very important for your exam point of view. So basically, there are 3 topics: meaning, elements, and types of assurance engagement. Let's focus first on types of types of assurance engagement. There are 3 types: reasonable assurance, limited assurance, and assurance engagement dealing with matter other than historical financial information. Step by step, we will be covering this topic. Focus on audit example. Focus on audit example. You know Management of X Limited. Management of X Limited prepare financial statement. Then there was shareholder and there was auditor. Now I am replacing key names of this example. Let's replace management with the responsible party. What you will be calling management? Responsible party. Responsible party for preparation of financial statement, we will be calling this as subject matter. Got it? Shareholder, we will be calling them intended user. What we will be calling them? Intended user. Got it? Auditor, we will be giving a comprehensive name, a practitioner. A practitioner. Auditor, apply audit procedure, we will be giving this name a suitable criteria. These are what examples of elements of assurance engagement. Giving the example of audit, I have connected all the elements of assurance engagement. Financial statement are prepared by management. Management name changed to responsible party, responsible for preparation of subject matter. Shareholder is intended user. Auditor is practitioner. Practitioner provide assurance report to whom? Intended user. Obviously, practitioner is a broader term as compared to the auditor. Got it? So let's focus on types of assurance engagement. You will automatically be covering all the assurance engagement topic. Types of assurance engagement. First is reasonable assurance, that is example of audit. In audit, you apply detailed, extensive audit procedure to gather audit evidence, sufficient, appropriate audit evidence to form conclusions. Auditor apply audit procedure to form reasonable level of, to give reasonable assurance, that is high level of assurance. This is a concept of audit. This is your first type. Done. Focus on this part, limited assurance. Limited assurance, that is review. Here, practitioner perform limited procedures like inquiry, analytical procedure. To gather sufficient appropriate evidence. Examiner will be making you confused that here sufficient appropriate evidence is not required. No, 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 no. Sufficient appropriate evidence is still required by applying limited procedures to form limited conclusions. And obviously, if you are applying limited procedure, obviously practitioner will be providing you lower level of assurance. Are you connecting the difference between these two? Audit and review. Review, limited procedure, lower level of conclusions, limited conclusions, lower level of assurance. Yes, sufficient appropriate evidence need to be taken care of. Both audit and review, that is reasonable assurance and limited assurance, has to be done on historical financial information. That is the very key. Both has to be done on historical financial information. Generally, you see the financial statement that are of historical events has been done, then accounting has to be done. Historical financial information. Third category is assurance engagement dealing with matter other than historical financial information. Other than historical financial information, third category. First two categories are historical financial information. Audit can be done, review can be done. Other than historical financial information, this is your C category case. Very, very important for your next attempt. In last attempt, question was specifically asked on this. Clarity. Let's focus on third type. Assurance engagement dealing with matter other than historical financial information. Always remember the case of Shark Tank India. If you have watched Shark Tank India, or you have any idea of startups, generally startups, when they want to get a good valuation, investors focus on what? Future event, future financial information data, and that is what? Prospective financial information. For example, you are currently in financial year 24-25 example, because data has been, let's say you are in financial year 25-26. 25, 26, 27, 27, 28 is what? Prospective financial information. Got it. Obviously, client has to take your client entity has to take assumptions to prepare future related financial information, and practitioner focus specifically on these things only. Got it. So financial information based on assumptions about events that may occur in future and entity possible actions. Practitioner obtains sufficient appropriate evidence about what? Whether management assumptions are reasonable. Management has disclosed material assumptions, and on the basis of the assumptions, financial information is properly presented. These three points are your main pointers to catch marks. Practitioner obtains sufficient appropriate evidence about what? Whether assumptions taken by the management to prepare FI, PFI are reasonable, material assumptions are disclosed, and third, on the basis of the assumptions, FI, PFI basically are properly presented. Obviously, in engagement such like this, assurance will be of moderate level. Got it. Language used in opinion section is slightly negative, like nothing has come to our attention. Are you able to connect? So, assurance engagement, two types: audit, review. Both were done on historical financial information. Third type, assurance engagement dealing with other than historical financial information. Classic case of prospective financial information. Assurance on prospective financial information. Focus on assumption part mainly. Assumption should be reasonable, material assumption should be disclosed, and on the basis of assumption, PFI should be properly presented. Audit practitioner obtain evidence relating to these 3 points. Sufficient appropriate evidence relating to these 3 points. Obviously, moderate level of assurance. And always remember, SQC1 will be applicable on all types of engagement. Clear? Clear to you? Done, sir. Can I move forward? Yes, 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 yes. This is the basic summary. Just remember, in this category, there is assurance or internal control of entity, but this is covered in CA final, so you don't need to know any detailing of this topic specifically. Okay, done. Then last topic. Last topic, non-assurance engagement. Earlier we covered assurance engagement. Now we are focusing on non-assurance engagement. Focus on the heading non-assurance engagement. Here, practitioner will not be giving any assurance. This is the MCQ part. Practitioner will not be giving any assurance. This topic has been covered in CA final, obviously, but ICI has given just a brief overview and very haphazard manner. I will present you in a more better way. So basically, standard on related services are there for non-assurance engagement, which are categorized in two parts: agreed upon procedures and compilation engagement. In both the cases, no assurance report has been given. In agreed upon procedure, basically this is X limited, this is practitioner. Agreed upon procedures are decided by management, agreed by X limit, agreed by practitioner. Practitioner apply procedures, and on the basis of its on the basis of evidence, give a factual findings report. Factual finding report, but whether he will be giving any assurance, answer is no. Answer is no. Done. Second, compilation. It is the responsibility of management to prepare and present financial statement. Yes, but financial statement presentation preparation involves a lot of technicalities. You can understand disclosure part, too much of technicalities. Yes, there may be a case where practitioner has been appointed to assist management in preparation presentation. Ultimately, responsibilities of management. Practitioner has been appointed to assist them. Practitioner will be assisting management in preparation presentation of financial statement. Obviously, he will be issuing compilation report, and no assurance will be given. Not at all. Are you able to understand this? And if we see the master chart, engagement, assurance, non-assurance. And assurance, three types: non-assurance, related services. Obviously, SQC1 will be applying on all engagement. Done, sir. Clear. I hope you are able to match my speed of making you revise in less time with greater conceptual clarity and linking the case study based questions. Fine. So after this, we will be covering another chapter, maybe chapter number 11 we will be starting. Got it? So thank you so much. Yes, people, let's start revision of SA 330 audit documentation. So what exactly is audit documentation? Basically, it is a record of three things. Auditor performs audit procedure to gather audit evidence to ultimately form conclusions. It is audit documentation is nothing but a record of audit procedure, perform audit evidence gathered, and audit conclusions drawn. In articleship, you will be hearing one term, working paper. Yes, audit documentation is also known as working paper or works paper. Fine. So what is audit documentation? Audit procedure, audit evidence, audit conclusion. Record of audit procedure performed, audit evidence gathered, and the audit conclusions drawn. Fine. Then audit documentation includes, some examples are given of audit documentation. Just remember 4 to 5 examples: audit program, analysis, checklist, the letter of confirmation you receive, letter of representation, summary of significant matter, issue memorandum, correspondence, mail. That is again audit documentation part. Fine. Remember, like AC. Audit documentation is basically AC. A is audit program, A is analysis, C is checklist, C is correspondence regarding significant matter. Is this clear to you? Remember basic examples. So what do you mean by analysis? Basically analytical procedures applied. Fine. Then audit documentation does not include. This is very important question. Audit documentation include, we have covered. Now audit documentation does not include. Basically, for example, let's say you have a duplicate copy of a particular invoice in your file. Will you be keeping that duplicate copy? Answer is no. So audit documentation does not include duplicates of document, obviously. Previous copies of documents corrected for typing or other errors. Some previous copies which have some typographical errors now have been corrected. Will you keep that typographical errors? Answer is no. Previous copies of documents corrected for typographical or other errors. Superseded draft of working paper plus financial statement. Superseded meaning outdated. For example, you have received financial statement copies. Again, client has updated some trial balance mistake and shared with you. You will not keep that outdated draft or working paper of financial statement, and notes reflecting incomplete or preliminary thinking. 4 points are there. 4 points are there. Audit documentation does not include duplicate of document. First point, typographical error, previous copies of document corrected for typographical errors. Third, superseded draft of working paper and financial statement. And fourth, notes reflecting preliminary thinking. Fine. 4 points are there. Audit documentation does not include. Done. So next topic is ownership of audit documentation. Who is the owner of audit documentation? So basically, if you are not maintaining audit documentation, your work credibility is zero. Simply zero. Your only property, auditor, my dear auditor, your only property is audit documentation. Prepare audit documentation. Otherwise, your work credibility is zero. No one will believe that you have performed audit efficiently. Your only ownership is your audit documentation. Fine. So audit documentation ownership belongs to the auditor. It does not belong to the entity. It does not belong to the entity. You will be asked in a question that management are the owners of the audit documentation. They can make pressurize auditor to share working papers. No, no. So SQC, as per SQC 1, audit documentation is a property of the auditor unless prohibited by law and regulation. Fine. So can auditor share his working papers? Yes. He may, at his discretion, make portions or extract from audit documentation available to client, provided it does not affect his work, it does not undermine the validity of the work performed, and it should not compromise the independence of the auditor. What I have explained to you, ownership of audit documentation as per SQC 1, ownership belongs to auditor. Sir, can auditor share with its client? Not compulsory. He may, at his discretion, make portion or extract from audit documentation available to client. But he should make sure that his work validity is not compromised, his independence is not compromised. Sir, let's say branch auditor. Working paper of branch auditors are the property of whom? Branch auditor. Principal auditor even cannot force branch auditor to share his working paper. Fine. Obviously, there should be a proper coordination between principal auditor and branch auditor. But always remember, the working paper of branch auditor are the property of branch auditor. Fine. Ownership of audit documentation. Done, sir. Repeat. So what do you mean by audit documentation? So it is a record of audit procedure performed, audit evidence gathered, and audit conclusions drawn. So give examples of audit documentation. AC, A for analysis, A for analytical procedure, C for checklist, C for correspondence, including email, significant matter. Fine. Completion memorandum. These are some examples. That what audit documentation does not include: duplicate of document, typographical errors, previous copies corrected which were having typographical errors, superseded draft of working paper and financial statement, and one more point: notes containing incomplete or preliminary thinking. Fine. Ownership we have already discussed. Then let's discuss objective and nature. You will find objective and nature point almost similar. If you get confused, what are the 2 points of objective or what are the 2 points of nature, write all points. Fine. Write extra point that will not cut your marks, because students tends to get confused between what were the objective points, what were the nature points. Honestly, these topics are same. So objective of auditor as per SA 330. What should be the objective of auditor as per SA 230? To prepare documentation. Simple. To prepare documentation. To prepare documentation in a way that provides a evidence, that audit was properly planned and performed as per SAs. That sufficient and appropriate record of a basis of auditor's report. Basically, you are preparing audit documentation so that anybody checks your working paper, he is satisfied that yes, audit was performed in an effective and efficient manner. Sufficient appropriate evidence was gathered to ultimately reach to a conclusion to form an opinion. Fine. Nature of audit documentation, similar point. Audit documentation should be prepared in such a manner that it provides evidence that audit was planned and performed in as per SA regulatory and legal requirement. Provides the evidence about audit conclusions, about achieving overall objective of the auditor. So these points meaning are almost same. Meaning are same only. If you get confused, sir, what were the objective, what were the nature, try to write all the points. This point is same, this point is same, this point is context is same, just written in other form. That's it. Objective and nature of the audit documentation. Clear, sir? Will you remember this? Yes, sir. Then let's talk about the purpose of audit documentation. So basically, purpose of audit documentation, what are the benefits of the audit documentation? Simply, uh, first 2 points connect with the junior article, senior article. So audit documentation sets the accountability, enable engagement team to be accountable for its work. For example, a particular person was responsible for applying audit procedure on sales data. Fine, he, whatever the procedure he has applied, he needs to make documentation. After reviewing the documentation, we can easily analyze the particular work performed by the junior article. So enable engagement team to be accountable for its work. Everyone gets accountable on the basis of their audit documentation. Fine. First point relate with junior article, then senior article. Senior article has to discharge review responsibility, direct supervise junior. Second point, assist member of engagement team to direct and supervise of audit work plus discharge their review responsibilities. Fine. 2 points are there. Then connect with previous year, current year. Previous year, current year, and assume that they are the same auditor. So it will retain record of matter of continuous significance for future audit, plan and perform the audit. Help engagement team to plan and perform the audit. These are some hints so that you can write down correct points. Ultimately, you need to write only these points. These are just an hint. Fine. So 2 points were relating to, let's say you are the previous auditor, you are the current auditor. So you will record a matter of continuous, record matters which were of continuous significance to the audit, prepare and plan the audit. Fine, sir. Then 2 points are related to quality control, inspections and review. As per SQC1 engagement, you remember in case of listed entity, EQCR has to be appointed and he does a review, critical review. Yes, sir. So review, enabling quality control review and inspection as per SQC1. Specifically, quality control review and inspection as per SQC1, and additionally external review can also be conducted, enabling external inspection in accordance with the applicable legal and regulatory requirement. Logic is very simple. They will be just checking your audit documentation. They will not listen to you, sir. Sir, you don't try to explain them, sir. I have done this, I have done this. They will be simply asking, show me your audit documentation. We will have a clear cut approach. They will have a clear cut approach just to get an idea whatever auditor has done on the basis of the documentation prepared. Got it? So purpose of audit documentation, let's recall all the 6 points. Purpose of audit documentation, 2 points we connected with the junior article, senior article. So enabling engagement team members to be accountable for the work. Senior article, discharge, enabling assisting member of engagement team to direct, supervise and discharging their review responsibilities. Yes, sir. Previous year, current year auditor were same. We connected 2 points here. Prepare and plan the audit, retaining record of significant matter for the future audit. 2 points were relating to quality control reviews and inspection as per SQC1, enabling quality control review and inspection as per SQC1, enabling enabling inspection and review as per the external audits requirement, maybe enabling external inspection in accordance with the applicable legal and regulatory requirement. Fine, sir. These are the 6 points. I hope it is making sense to you. Fine. Then let's talk about the preparation of audit documentation. Auditor, my dear auditor, how you should prepare audit documentation. So SA says, prepare audit documentation in such a way. Prepare audit documentation in such a way that an experienced auditor, let's say you are the person, let me show you. Auditor, this is a, let's say, experienced auditor who has no connection with the audit, who has no connection with audit. Auditor, prepare AD in such a way that an experienced auditor who has no connection with this audit is able to understand, just simply by looking at your audit documentation. He is able to understand, sir, what nature, timing and extent of audit procedure performed, Result of audit procedure performed, basically audit evidence gather, and areas of significant matter arising during the audit, and how auditor reached to the conclusion and the professional judgment taken. He is able to understand everything. Just understand the level of documentation that is expected from the auditor. Audit documentation, auditor prepare AD in such a way that experienced auditor who is not connected with this audit, right, having no previous connection with the audit, if he sees your working paper, he's able to understand the nature of audit procedure applied, the result of audit procedure, that is basically evidence gather, and the significant matter, judgment taken, conclusions, everything he's able to understand. Got it? And for nature, timing, and extent of audit procedure, auditor has to make sure that they document following things, like who performed the audit work, date on such work was completed, who reviewed the audit work, date of review and extent of review, and specifically identifying characteristic of the specific item tested. What does this mean? There are various assertions like existence, valuation, completeness, etc. So for audit procedure has to be performed differently for different assertion, so mention these also. Identifying characteristic of the specific item tested, for example, existence, completeness, valuation, whatever you have tested, mention that also. Got it. Got it. So, my dear auditor, how will you perform audit documentation? How will you prepare audit documentation? Very, very important point. How will you prepare audit documentation? So, prepare audit documentation in such a way. Prepare audit documentation in such a way that experienced auditor who has no connection with this audit, he is able to understand the nature of the audit procedure performed, the nature of the result of the audit procedure, that is basically audit evidence gather, significant matter arising during the audit, judgment taken, conclusion reached. Further, in documenting nature, timing, and extent of audit procedure, record who performed the audit, who performed the procedure, when, date, who reviewed, when, date, extent, identified characteristic of the specific item tested. Very important point. This question has not been tested in last 3 to 4 attempts. There may be a case where you will be finding 4 to 5 marks question. Fine. Done, sir. Done. Then, factors to be considered while preparing form, content, and extent of audit documentation. Auditor, what format has to you need to take care of? Content, how much documentation you need to take care of? There are certain factors auditor has to consider, and depending upon these factors, auditor decide whether I need to increase my audit documentation, what should be the format, how. That is a basic thing. For example, let's say if you are doing audit of, let's say, small entity, very less complex entity, audit documentation will be very simple, will be less, that will be okay. But if the size and complexity of the entity is very complex, obviously audit documentation will get increased. Just an example. So there are some certain factors which auditor need to taken care of. What are those factors? Basically, remember the keywords. For example, first point is psycho, size and complexity of the entity. Then remember the keywords: audit procedure, nature of the audit procedure performed, significance of the audit evidence obtained. Then risk of material misstatement, again another keyword: identified risk of material misstatement. Obviously, a area which has a high risk of material misstatement, auditor will try to documentation more and more as compared to the area which has a low risk of material misstatement. Nature and extent of audit exceptions and methodology and the tools used. Remember these 6 points. Even if you are not able to recall the 7 point, fine. If question is of 4 to 5 marks, if you write these 6 points, you will be getting full marks. So I am focusing on these 6 points only in revision. So what are the 6 points? Auditor. First assume you are a psycho, meaning, sir, size and complexity of the entity. Fine, sir. Then remember all the keywords of the audit: nature of the audit procedure, evidence, significance of the audit evidence, risk of material misstatement, identified risk of material misstatement, nature of audit exceptions, audit methodology, and the tools used. More than enough. You will be fetching all the good marks. Fine, sir. Can I move forward? Yes, sir. Factors to be considered while preparing form, content, and extent of audit documentation. Done, sir. How will you prepare audit documentation? So we will prepare audit documentation in such a way that experienced auditor who has who has no connection with the previous audit, with this audit, is able to understand audit procedure perform, audit evidence, significance matter. Remember, and for audit procedure, there were 3 points are also there: revision and revision, revision and revision. That's the beauty of sakshamjain revisions. Okay, sir. Done, sir. Then let's move towards another topic: assembly of final audit file. Assembly of final audit file, very important topic, very, very important topic. So, what exactly do you mean by audit file? Basically, an auditor, suppose, has performed audit for Reliance Limited. So for Reliance Limited, working papers will be kept in a file, either in a physical form, either in an electronic form. Both are allowed. Fine. That is the concept of audit file. See the definition. One or more folder or storage media allowed, physical, electronic, both are allowed, that records audit documentation for a specific engagement. For example, you will be keeping audit file for Reliance separately, you will be keeping audit file for HDFC separately. Obviously, yes. Fine. So audit file is nothing but a storage media, either physically or electronically, for the documentation prepared. Fine. Clear? So SQC1 requires firm establish policies and procedures for timely completion of audit file. Basically, what is the concept? What is the concept? Suppose you are signing audit report here. Meaning, if you are signing audit report, obviously you have applied audit procedure, you have obtained sufficient appropriate audit evidence, conclusion drawn. Fine. They simply state your documentation part gets completed here. Sir, there was 60 days limit. Focus. Documentation part basically completes, meaning you will not perform no new procedures, no new evidence, no new conclusions, nothing. Audit is complete. Okay, sir. But you have been given 60 days. 60 days for assembling of final audit file. Understand the context. Assembly of final audit file. Sir, here it is an administrative work. This is a clear-cut administrative work. Sir, you are not performing new audit procedure. You are not gathering new audit evidence. Nothing. This is just an administrative work. You should do the documentation here only. Just to assembling everything. For assembling the audit file, you get 60 days. You get 60 days. Fine, sir. You get 60 days. 60 days, and this is a clear-cut administrative nature. Fine, I will be giving some examples also. I say I will be testing these examples. Fine. Once you have done the assembly of final audit file gets locked. You can't edit, you can't delete anything. You can't delete now. You have to retain audit file for 7 years. Minimum 7 years. Thala for a reason. Thala for a reason. From the date of audit report or group audit report, whichever is later. That is the basic logic. Let me show this from my notes. So SQC1 require from firm, hi firm, please establish policies and procedure for timely completion of audit file. It should not be ordinary more than 60 days after the date of audit report. And this is an administrative process. Remember, it is an administrative process, meaning no new audit procedure performed, no new evidence gathered, no new conclusions drawn, nothing. This is the administrative process. We will be seeing some examples of administrative process. Fine. After you have assembled the audit file, it gets locked. You can't delete any document. You can't add any document. Everything gets locked. Fine, sir. So retention, thala for a reason. 7 years from the date of audit report or a group audit report, whichever is later. Fine. Fine. Sir, let's take an example of administrative process. You will automatically understand that, sir, yes, here examples, we are not performing any audit procedure. So for example, you have deleted or discarded superseded document. You have deleted or discarded superseded documentation, a duplicate document, or outdated documentation, you deleted, discarding. You sign off complete checklist. You sorted collating SCC, cross-referencing working paper. For example, suppose, let's say a purchase file document was there in a sales file. You will obviously sorted. You can cross-referencing working paper, debtor, sales, cross-referencing working paper. Allowed, sir. You are not performing any new procedure. This is just an administrative work. Signing of the complete checklist, administrative work. Focus on the fourth point. Documenting audit evidence that auditor has obtained, discussed, agreed with engagement team member before the date of audit report. This is a special point MCQ can be asked in your exam. So what exactly the case? Let me give you one example. Suppose, let's say auditor has there was some disturbance, so let's focus on example again. So let's say suppose auditor has obtained a particular document, particular contract from client in a mail. He has inspect that mail, discuss with the team members, but he couldn't take a printout. So already audit evidence was gathered, conclusions was drawn. So can he take printout and attach on the file? Yes, sir, allowed. It is administrative process, not a difficult, not new, no new evidence has been gathered here. Fine, so that is allowed. So this can be asked in your exam. Is specifically that's why I have highlighted this part before. So documenting audit evidence that auditor has obtained, discussed, agreed with engagement team member before the date of the audit report. Fine. So classic case, important case. Done, sir. Then there is one topic of completion memorandum. Important topic, completion memorandum. So basically what happens, auditor identified significant matter during the audit. Auditor address those significant matter. So what auditor does? He prepare a summary of significant matter identified and how they were addressed during the audit and named it as completion memorandum. How it will help? It will help in effective review. It will help in effective and efficient review and inspection of audit documentation. Specifically, for example, SQC1, EQCR will be coming for review. He will directly be jumping to completion memorandum. Okay, these were the significant matter, how they were addressed by the auditor. Common sense. So such summary help in effective and efficient review and inspection of audit documentation, particularly specifically for large and complex entities. It assists auditor consideration of significant matter. It may also help auditor to understand whether individual relevant essay objective, specifically individual essays have different objective, which essays objective were not achieved, which prevented auditor from obtaining, from fulfilling its overall objective. That is the basic concept of completion memorandum. Repeat. So completion memorandums are auditor prepare a summary of basically significant matter identified during the audit, how they were addressed. These matter helps in effective and efficient review and inspection of audit documentation. It assists auditor consideration of significant matter. It also help auditor whether individual relevant essay objective that auditor cannot achieve, preventing auditor to achieve overall objective of the auditor. Every standard gives a specific objective. For example, essay 230 saw auditor objective was to prepare documentation, right? So every objective, every essay has individual objective. Which objective was not achieved, it may help auditor in knowing. Fine. Done, sir. Last question. Documentation of significant matter and related significant professional judgment. This question you have to do a writing practice because little language is tricky. If you are doing writing practice of this question, then you will be good to go. Otherwise, it could get little complex. So, documentation of significant matter and related significant professional judgment. Basically, what is significant matter? Auditor has to take a professional judgment. Auditor has to do objective analysis. Fine. So first, there are some examples which examples of significant matter that give rise to a significant risk. For example, first, audit procedure result are indicating that financial statement could be materially misstated. This is clearly a significant matter. Or there is a case of need to revise auditor previous Roman and auditor responses to those risks. Are the circumstances where auditors find difficulty in applying audit procedure. Again, a significant risky matter. Again, this is a significant matter. There are matters which can result in modification of audit opinion, or there are matters due to which auditor thinks that EOM need to be included in the auditor report. So there are certain examples. These are certain examples of significant matter that give rise to the significant risk. Connect with modification, connect with revise of Romum, revise of further audit procedure, Connect with financial statement could be materially misstated. Connect with EOM, difficulty. These are some examples. Fine. So there can be other examples, but specifically ICI will be looking for these examples only in their marking scheme. Fine. Then last topic. Examples of circumstances where preparation of audit documents relates to the use of professional judgment. Auditor takes a lot of professional judgment, right? They have asked for certain examples where auditor is using professional judgment, where auditor is using professional judgment, and for using that using professional judgment he needs to make a documentation. And these 3 points are very tricky. Focus. Rational for auditor conclusion: when requirement provide, auditor shall consider certain information or factors. In standard specifically, there are various standards which talks about auditor has to consider certain factors, certain information to take a professional judgment. Yes, sir. When requirements provide that auditor should consider certain factors, certain information, how auditor is considering these factors and the conclusion he is reaching, he has to give a rational. He has to give a rational for auditor conclusion when a requirement provides that auditor has to consider certain factors, certain information. Fine. Second, management takes a lot of judgment. Auditor has to assess management judgment, and finally has to take a judgment whether management judgment were reasonable. Auditor has to document the basis for the auditor conclusion on the reasonableness of the management judgment, on the reasonableness of the areas of a subjective judgment which are taken by the management. So what is the how auditor concludes as management judgment are reasonable? He has to give a basis. He has to document the basis. Fine. Fine. Are you getting it? Third point. Authentication of document is not in a scope of audit first. But suppose auditor identifies certain situations where he got doubt relating to authentication of document. So he will be doing a further investigation and reaching to the conclusions. Fine. He has to document the basis for the auditor conclusion about the authentication of document. It is not in the scope of audit, but certain discrepancies were noted and auditor does the further investigation and reach to the conclusion about the authentication of document. Then he needs to document the basis for the auditor conclusion. Basis for the auditor conclusion about authentication of document when further investigation is undertaken in response to the conditions identified during the auditor that caused auditor to believe that document may not be authentic. Are you getting it? So these are the 3 points, important points, can be asked in your exam. It can get little tricky to write specifically these points because meaning needs to be justified. So it would be my humble request to please do a writing practice of this question specifically. Got it? So this is our chapter number 6 revision. Thank you so much. Yes, people, now let's start a revision of chapter number 11, ethics and terms of audit engagement. Generally, it tends to have a weightage of 8 to 12 marks. 4 to 6 marks are surely asked in MCQ, specifically from topics like ethics and independence. Fine. So let's start our discussions. We will be covering topics of ethics, independence, professional skepticism, essay 210, SQC1, and essay 220. So let's start with our discussion of ethics and independence first. These topics are very important from MCQ point of view, and generally you will be finding application based question. For example, topics of ethics, you will be finding like identify violation of ethical principle, then explain. You will be finding identify threat on independence, then explain, apply the safeguard. These are the patterns that are generally there in your exams, or directly you may find the MCQ question. Fine. So let's start with ethics topic. What exactly is ethics? Basically, as a professional accountant, public is relying on your judgment, on your reports, on your work. So that should be credible enough. So ultimately you need to follow certain principles because users are trusting your work. So professional accountant, follow moral values. Follow moral values when you are doing any work. That is the basic concept. And there are five fundamental principles of ethics. CPIPO, a short form CPIPO: confidentiality, P for professional competence and due care, I for integrity, P for professional behavior, and O for objectivity. Let's discuss one by one. First is integrity. Professional accountant. My dear professional accountant, be very straightforward, maintain truthfulness, be very honest, be very fair in all your business relationship. That is the basic concept of integrity principle. Professional accountant, maintain integrity, maintain honesty, be very straightful, and make sure you are not associating with any information or report important that is negligently prepared, that omit in vital information or in a way that could mislead, or that contain materially false or misleading information. Don't get associated with such information or report. Examiner will be giving you such thesis in exam, and what will be asking you identify the violation of ethical principle. Let's say a professional accountant get associated with information or report that is negligently prepared. That is basically violation of integrity principle. So you need to remember these 3 points specifically. Let me repeat. Professional accountant, be very straightforward, maintain truthfulness, be honest, be fair in all your business relationships. You should not get associated with any information or report that is negligently prepared, contains materially false information, or omit or obscures vital information, making it making report or information misleading. That is the concept of integrity principle. So repeat this: you should not be associated with any information or report that is negligently prepared, omit or obscures vital information, contain materially false or misleading information. Fine. Fine. Negligently, omit, misleading. These three words are important. That is the concept of integrity. Now let's discuss professional competence and due care. Basically, what it means to say professional accountant, you should attain and maintain skills and knowledge. Basically, let me give you an example. Let's say you have obtained knowledge about GST laws. Obviously, there are various amendments. So, obtain, attain, and maintain knowledge and skills. Keep updating yourselves. Keep updating yourselves. So, attain and maintain knowledge and skills. Why? So that you can provide competent professional services to client or employers who may have hired you as per the current technical and professional standard and relevant legislation. Basically, provide good competent services. To provide competent services, you should attain and maintain skills and knowledge required to ensure client or employer receive competent professional services as per the current technical legislation. What do you mean by due care? Act diligently. Act diligently, meaning act on a timely basis, thoroughly basis, careful basis. That is the basic concept of diligently. Let me give you two examples of professional competence and due care. For example, first example was relating to you did not make aware about the client. You did not make aware about changes in laws and regulations to a particular client. This is a violation of professional competence and due care principle. Fine. Got it. Failure to update client about new laws and regulations. What language you will be using? The professional accountant should attain, maintain knowledge and skills. Why? To provide competent technical and professional services to your employer or client based on the current technical professional legislation, and act thoroughly, act diligently, meaning act thoroughly, carefully, and on a timely basis. Fine, sir. CP, IPO. Then confidentiality. Confidentiality basically is you are maintaining, you are not disclosing, basically to you are not disclosing any information that is obtained in your professional relationship, business relationship, to outsiders. For example, a basic example that will be given to you. For example, let's say you were in the audit of XYZ Limited, and you disclose certain information of XYZ Limited, financial information of XYZ Limited, to your friend who took benefit and made a huge gain in stock market. Which fundamental principle you have violated? Sir, confidentiality. As a professional accountant, whatever knowledge you have gathered in your business relationship, please don't disclose to any third party. That is the confidentiality principle concept. It requires professional accountant to protect confidentiality of information. What information? Information that is obtained in your professional or business relationship. Basically, a client will be sharing any information or report on the basis of the principle of confidentiality, that this professional accountant will maintain confidentiality. He will not disclose to any third party. And if you are disclosing any information that is obtained in your business relationship to any third party, you are violating which principle? Confidentiality. Basic example that I have taken will be tested in your exam. Got it? Right, sir. There are certain exceptions where disclosure of information is permitted, allowed. For example, disclosure is mandated by law. Disclosure is mandated by law. Professional accountant has to disclose because it is mandated by law. For example, let's say you've detected fraud above 1 crore. Obviously, you need to report to central government. That is mandated by law. So here, law is always above the confidentiality principle. Always remember this. Always remember this. Law is always above the confidentiality principle. Confidentiality principle says don't disclose. But when it comes to law and confidentiality, take side of law. Specific circumstances where disclosure of information is permitted: when disclosure is mandated by law, when disclosure is permitted by law and authorized by the client employer, and when professional duty to disclose exists provided not prohibited by law. Three cases are there where it is duty of the professional accountant to disclose in any way: disclosure mandated by law, disclosure permitted by law and authorized by the client, and when a professional duty to disclose exists provided it is not prohibited anywhere. That is the basic concept of confidentiality principle. Fine. Three principles we have taken care of. Then let's discuss about the objectivity principle. Objectivity principle simply say your professional judgment should not be compromised because of BCCI. Cut C, BCI. Your professional accountant, professional judgment should not be compromised because of bias, conflict of interest, and undue influence of others. Let me give you one example. Suppose I have been appointed as an auditor of a particular client, and that client senior director, let's say director, is basically my sister. Obviously, think whether my professional judgment will get compromised. Obviously, yes. Obviously, yes, because of bias, basically. Yes. So, this principle requires a professional accountant. Make sure your professional judgment is not compromised because of BCCI. Cut the C, bias, conflict of interest, and undue influence of others. You are accepting gift or hospitality from client. Obviously, it will hamper your professional judgment. It will hamper your objectivity principle. Got it, sir? Got it. Clear. Done, sir. That is the basic concept of objectivity. Always remember, your professional judgment should not be compromised because of BCCI, bias, conflict of interest, undue influence of others. BCCI, cricketing body, you remember? Very rich body in India. Objectivity principle. Done, sir. Done. Done. And last is professional behavior. Professional behavior. As a professional accountant, please make sure that you are complying with the fundamental principle and don't involve in any activity which bring disrepute to your profession, disrepute to institute. That is the basic concept of professional behavior. So comply with laws and regulations. Avoid any conduct that bring discredit to your profession. Should not be engaged in any activity that impairs integrity, objectivity, reputation of the profession is not compatible with the fundamental principles. Two basic examples that ICI will be testing is, for example, suppose you got inquiry or a notice from Institute of Chartered Accountant of India, and you failed to reply on a timely basis. What is your professional behavior, man? A body ICA is sending you notice and you are not bothering enough to reply. This is a professional behavior violation principle. Always remember this. Another example that can get tricky in your exam is, as an auditor, always remember, whenever you are starting a new audit, you have to obtain no objection certificate from the previous auditor. You send it no objection certificate request, previous auditor did not bother to reply. Which fundamental principle he is violating? Professional behavior. Always remember. Always remember, these two examples will get tested in your exam. Fine. Professional behavior. Done, sir. Can we do active recalling of all the 5 principles, whatever we have covered? Let's do active recalling. So we don't require notes. We will be focusing on active recalling. So there were 5 principles of ethics. CPIPO. Let's talk about first confidentiality. Confidentiality basically means not whatever information, professional accountant should not disclose any information that he has obtained in his professional or business relationship with any person, with any third person. Fine. However, there are certain exceptions. Certain exceptions when disclosure is permitted by law, when disclosure is mandated by law and authorized by the client, and when it is the professional duty for a disclosure, provided it is not prohibited anywhere. That was the concept of confidentiality. Then we talked about professional competence at UK. Professional accountant, maintain knowledge and skills. So to provide professional competence services to your employer or client as per the current technical legislation, and also to act diligently, meaning act thoroughly on a timely basis and on a carefully basis. That is the basic concept of professional competence in UK. Suppose, let's say, you fail to update about changes in laws and regulations to your client. This is what violation of professional competence in UK. Integrity. Be very straightforward, maintain truthfulness, be very fair in your business dealings. You should not be associated with any information or report that is negligently prepared, that contains materially false information, that omit or obscures vital information, making information or report to be misleading. Then professional behavior. Make sure you are complying with the laws and regulations, and don't involve in any activity which brings disrepute to your profession or is not compatible with fundamental principles of ethics. Two examples. You failing to reply to ICI notice within time. Send a previous auditor not bothering enough to give no objection certificate reply to new auditor. ठीक है, sir. And objectivity. Your professional accountant, make sure your PJ, professional judgment, should not be compromised because of ECCI, courtesy, bias, conflict of interest, and undue influence of others. Receiving gift and hospitality from clients are what principle you are violating? Ethical principle you are violating. You are violating objectivity principle. Fine, sir. That is the basic concept of violation ethics principles. Now, there are two approach towards ethics: principle based versus rule based. So what do you mean by principle based versus rule based approach? uh, Principle based approach basically tell professional accountant, take professional judgment, apply professional judgment, and and arrive at the conclusion. But rule based approach is generally rigid. It tells professional accountant to follow rules strictly. It gets very rigid. It is to be strictly in compliance with the rigid rules. But principle based approach says professional accountant take professional judgment and focus on the adhering to the spirit of the ethics. Basically, what ethical principles, what ethics means to say, adhere to that. Let me give you an example. Suppose, let's say, uh, your firm was the proposed auditor of a particular X Limited, and let's say you were the partner. And you meet the management team, and you find it that CEO was your crush, was your old crush, was your old best friend, I can say. So problem is, there is no rule which prohibits you from taking audit, right, sir? But if we think logically, obviously our professional judgment will get compromised. Old memories will be there, right, sir? Your professional judgment will get compromised, definitely, right, sir? So what should here, what should reasonably steps can be taken? Here, firm may decide that we will accept the audit because it is permissible, but we will replace the partner here. We will replace the partner here because that partner will get influence from the best friend, right, sir? Right, from the ex best friend, I can say. So, basic logic is accept the audit but replace the partner. That is the principle based approach. Fine, fine, logical, logical. Take professional judgment, apply professional judgment as per the given circumstances, focusing on adhering to the spirit of the ethics. That is the whole topic of ethical principles. I hope things are pretty much clear to you. Then let's discuss a very basic topic, professional skepticism. 4 marks question can be asked in your exam specifically on this topic, professional skepticism. Basically, professional skepticism says be very alert. Be very alert. Have a attitude that includes questioning mind. Be alert to possible misstatement and obviously critical assessment of audit evidence. As an auditor, be very alert about the possible material misstatement. Always have an attitude of a questioning mind. Fine. Don't be lazy in your work. Be very alert. Be very alert. Always think, yes, possible material misstatement can be there. Possible material misstatement can be there. Fine. Professional skepticism. This can be asked in your 4 marks. This part. Again, 3 marks can be on this. They say professional skepticism, being alert to, they have given 4 examples. Audit evidence that contradict other audit evidence. If one audit evidence is contradicting other audit evidence, be very alert. Condition indicating possible fraud. Condition indicating possible fraud, be very alert. Circumstances requiring the need for audit procedure in addition to those required by the SAs. There are circumstances which is demanding auditor may need to apply additional audit procedure. And information that brings into the question the reliability of document and responses to inquiry. There, due to some information, auditor is in a position or is basically questioning the reliability of the document or and the responses to the inquiry. Professional skepticism, being alert to. Basically, let me give you 4 techniques. I'm not giving other examples, but I'm giving you one technique so that you can remember these 4 examples. So basically, what happened? My friend Abhishek, uh, was having one girlfriend. So at night, they both talked and say tata bye bye. Then fine, Abhishek wake up in the night and carefully checked his WhatsApp. She was online. Abhishek didn't bother. Abhishek went to sleep. After 2 hours, again Abhishek wake up. She was again online. Circumstances indicating possible fraud. Later on in morning, when Abhishek asked, "When did you sleep?" She said, "I was asleep as soon as I told you tata bye bye." So audit evidence is contradicting other audit evidence. Obviously, this is a signal of possible fraud. As soon as she shared ki I was sleep altogether, Abhishek thought I need to apply additional audit procedures. There is information that brings into the question the reliability of the document and responses to inquiries. So this is a funny example that I generally give to make you learn these 4 points. Fine, sir. Fine. You can connect with this example and remember these 4 points. So audit evidence that contradict other audit evidence, circumstances indicating possible fraud, condition indicating additional audit procedure need to be applied, and information that brings into question the reliability of the documents. Fine, sir. Professional skepticism, being alert to. That's done. And if you are maintaining professional skepticism throughout the audit, it reduces the risk of inappropriate over square. Meaning, It will reduce the risk of taking inappropriate assumption in determining the nature, timing, and extent of audit procedures. It will reduce the risk of overlooking unusual transaction. It will reduce the risk of overgeneralizing conclusions from the audit observation. That is the main topic of professional skepticism. If you are maintaining professional skepticism, you will reduce the risk of inappropriate oversquare. What do you mean by inappropriate oversquare? Using inappropriate assumptions in determining the nature, time, and extent of audit procedure, overlooking unusual transactions, overgeneralizing conclusions drawn from the audit observations. Fine, fine, got it. When I teach to students in my regular exam oriented batch, I give each and every particular point examples, but here we are focusing on the revisions and specifically learning and recalling various concepts, so that's why I have focused only on the recalling part for this topic. Got it? Professional skepticism. Fine, sir. Then let's have a discussion of independence. Take 1 minute break, and then we will be starting our discussion with the revision of independence. Yes, people. So let's now move our discussion to independence topic. What is independence? Independence simply means your judgment is your judgment, none of other judgment. Meaning, judgment of a person is not subordinate to the wishes or direction of another person. Simply meaning. For example, let me give you one basic example. I was appointed auditor of a company in which my wife was a director. So I found one misstatement. I said, this is one misstatement. Amount of anger I faced from her, you can't even imagine. Because of the fear of anger of my wife, I was not able to do proper audit. Tell me the reason. Because as she's my wife, I was not independent. That is the basic concept. Your judgment, if you are independent, that means your judgment is not subordinate to the wishes or the direction of the another person. And if I am doing audit of a company where my wife is a director or CEO, obviously my judgment will get compromised. So as an auditor, I should not accept such audit. As a firm, we should have a clear cut policy. It is basically prohibited only. Fine. So it implies judgment of a person is not subordinate to the wishes or the direction of the another person who might have engaged him. There are two interlinked perspectives of the independence. First, you should appear independence and you should be independence of mind also. What exactly it means? Remember three words: IPO: integrity, professional skepticism, objectivity. Repeat: IPO: integrity, professional skepticism, objectivity. Integrity, professional skepticism, objectivity. Now focus on this: independence by appearance. Basically, you should look independent. You should appear independence, meaning avoid any fact and circumstances, that can make believe third party who is not a casual party, who is a reasonable well informed party. Avoid any fact and circumstances that made third party to believe that your IPO is getting compromised, that engagement team member IPO integrity, professional skepticism, objectivity is compromised. Meaning you should always appear independent. You should avoid any fact and circumstances that make third party who is a reasonable, well informed party, who you should not make believe third party that your IPO is compromised. Simply, that is independence by appearance. Independence of mind, basically your state of mind. It is talking about the state of mind allowing individual to act with IPO integrity, professional skepticism, and objectivity without being affected by influence that can compromise your professional judgment. Basically, a state of mind of an individual to act with IPO without being affected, without being the professional judgment compromised because of others. Got it? There are two interlinked perspectives of independence. You should appear independent and you should be independent by mind. Got it? Got it? Kya? हाँ sir. Appearance This is a little tricky language, but if you focus on the literal meaning, it gets very easy. Independence by appearance, meaning you should appear independent, meaning you should avoid any fact and circumstances that make third party believe that your IPO is getting compromised. What is IPO? Integrity, professional skepticism, and objectivity. Got it? Kya? हाँ sir. Then let's talk about threat to independence. So basically, topic move like this: independence. Then we focus on threat to independence, and obviously to remove threat, we have safeguard to independence. Fine. So now we will be discussing threat to independence. There are 5 threat to independence. How question can be asked in your exam? Question will be like application based question. For example, they will be asking which in this case identify threat to independence, or question can be directly asked in your MCQ. Very important topic. I will be taking a lot of examples to make sure that your all tricky examples are covered, and whatever I say, I twist the cases, you will be able to score good marks. So let's focus on intimidation of threat. Intimidation threat, basically you are getting intimidated, you are discouraged from acting objectively and maintaining professional skepticism, like for example threat of litigation, threat of litigation, threat of replacement over disagreement. This is what intimidation threat. When auditors are discouraged from acting objectively, for example, you find particular misstatement, client intimidated that we may need to replace you. That is what intimidation threat. This is clearly a threat on independence. You will be fearing that if I lose a particular assignment, obviously financial loss will be there. So there is a threat of replacement over disagreement, threat of litigation, intimidation threat. When auditors are discouraged from acting objectively and maintain professional skepticism, examples, litigation, threat of litigation, threat of replacement, basic examples. Fine, got it. Yes, sir. Second is advocacy. Focus on the literal meaning of the word advocacy. You are advocating, you are promoting. If you are promoting, if you are promoting as an auditor, if you are promoting client interest or perceived to promote client interest, then it is creating advocacy threat. For example, you are particularly acting as an advocate for client in litigation matter. You are basically promoting client interest. People will think that your objectivity, your independence is compromised. You are dealing in share security of a client. Focus on the word dealing, not holding. It is dealing. Basically, you are dealing in shares and securities of a shares of a particular client. This is what advocacy threat. It arises when auditor is promote or perceived to promote client position to extend that people think that compromise auditor objectively. Two examples always remember: you may be representing client in tax litigation matters, acting as an advocate, dealing in share securities of a client. Got it, sir? Very important, very important advocacy threat. Then C, familiarity threat. Basically, because these are self-evident and due to the relationship with the client, you get little sympathetic towards your client interest, leading to familiarity threat. For example, let's say you are you have accepted any gift or hospitality from the client. It creates a familiarity threat because you will be getting little sympathetic. Let's say your close relative is working as a senior at a senior position in the client business. Familiarity threat. Objectivity will get compromised. Yes, sir. Then there has been a long association between the auditor and the client. You are auditing a particular client for a long duration. Again, obviously, it will create a familiarity threat. To curb this threat, safeguard has been applied by the Companies Act by a provision of rotation of auditor. Got it? 3 examples are very basic. You have accepted gift and hospitality. Close relative is working at a senior position in the client. Long association between the auditor and the client. And fourth point is little tricky. Focus. Former partner of audit team. former partner of audit team being director of client company. Former partner of audit team being director of a client company. That means CA firm, a particular former partner, has joined particularly client as a director. Now think like this. Whenever team will be going for audit, obviously they will be remembering that former partner. They have the good relation with that partner. Obviously, it can create a sympathetic towards your client. It can create a familiarity threat. Got it? Got it, kya? So 4 examples are there. This is important, tricky. Then Then comes the self-interest threat. Basically, it occurs when auditing firm, partner, associate could benefit from financial interest in an audit client. For example, let's say uh, major audit fees is earned from a single client. That is a clear-cut self-interest threat. So direct financial interest, then undue dependence on the client business, 40% fees from a single client. This is what self-interest threat. If you lose that client, obviously it will impact financially. Then uh, direct financial interest or materially significant indirect financial interest, holding shares of a client. Remember, dealing in shares of a client was advocacy. If you are holding a shares of a particular client, this is what self-interest threat, prohibited. Holding shares of a client, not allowed. Fine. This is done. This is done. Then there is a case of contingent fees. Contingent fees for the audit engagement. Let's say client has said that if you give this particular opinion, we will give additional fees of percentage. For example, this is contingent fees for audit engagement, not allowed. Not allowed specifically. Threat to independence. Then potential employment with the client. For example, this is again very important thing like this. Let's say a manager was doing audit of a particular client. That client told the manager, how much you earned? Ask manager, how much you earned? Manager told, sir, I earned 14 lakh. That is a decent package. Client offered join after 3 months at a package of 25 lakh rupees. This is a clear potential employment with the client. Do you think that manager uh, will get little excited because he will be getting some financial interest if he join that company? Obviously he will. We tend to ignore material misstatement, if any. Fine, he will be interested. He will have a financial benefit. That creates a self-interest threat. Always remember potential employment with the client. Contingent fees, undue dependence, direct financial interest, that is holding shares of a company. If you have given any loan or guarantee to client or from client, prohibited. Prohibited, basically threat to independence. But just remember this, there are obviously technicalities, like suppose you have taken particular basic loan from, let's say, banking company of which you are auditing in the normal course of business, that is allowed. But let's not get into the technicality. If you find this in your exam, simply mark self-interest threat. If you have close business relationship with the audit client, self-interest threat. But if you have long association between auditor and client, familiarity threat. Very basic difference, very minute differences. I will be uh, pointing out again areas where you can get trouble in your exam when you are approaching MCQs. Fine. Then self-review threat. Self-review threat, basically you are reviewing your work only. When team member was there are two cases: when auditor review judgment or conclusions made in prior audit or non-audit engagement. For example, you were involved in accounting treatment, you were involved in preparation of financial statement, and you are appointed for doing audit. Obviously this will create self-review threat because you are doing audit of a work that you have already performed. Self-review threat. Done, sir. Second, if focus, when team member was previously director, a director of X Limited joined audit team. Now how it will create self-review threat? Think, that director would have taken lot of judgment, lot of decisions. Now he has joined our CA firm and he will be auditing that judgment only. Self review threat. Got it? Yeah. Self review threat. Fine, 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 sir. Tricky cases. Tricky cases for your review. Giving you 2 minutes. Take 2 minutes and cover this. These are tricky cases I have specifically highlighted. For example, potential employment with the client, self-interest threat, former director, joint client, former director, joint audit team. To former director, joint audit team, self-review threat, former partner of audit team, joint as a director. Now this is a vice versa case. Former partner of audit team, obviously you will be getting little familiarity, little sympathetic familiarity threat. Dealing, advocacy, holding, self-interest, very minute differences. Close business relationship, self-interest, long association, familiarity threat. Very minute points, but I have covered separately also. Got it. 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 Yes, sir. Then, obviously, if there is a threat to independence, you need to apply the safeguards. You need to apply the safeguards. So, how will you write this for 4 marks? For public to have a confidence in the quality of the audit, auditors should be independent and appear independent. Yes, sir. If there is any threat to independence, he needs to apply safeguard. Before taking any work, auditor must consciously consider whether it involves threat to independence. Yes, if there is a threat to independence, simply either desist from the task or eliminate threat or reduce to an acceptable low level by putting it safeguard. That is the basic logic. 3 points you need to remember. If there is a threat, either desist from the task or eliminate task or reduce to an acceptable low level. Fine. Whatever safeguard you have taken, make sure you are documenting that properly. And if you're not able to apply safeguards, take measures, withdraw. Simply withdraw. That is the basic concept of safeguard against threat to independence. Let me give you one example. Suppose, let's say your uncle was holding Reliance Limited shares and he passed away. He passed away. Distant uncle. Bad news, huh? Then let's say very, very distant. Huh? Don't get emotional. Very, very distant. Okay. Then let's say that uncle was holding 100 crore, 1 crore, some good some holdings of Reliance Limited, and that distant uncle, very distant uncle, you don't even remember the name. Don't get emotional. That uncle has righted a will, and in that will all the properties, the Reliance shares were in your name. You were the auditor of that particular Reliance Limited. You were very happy. Wow, I got so much of property. Thank you, uncle. Now I remember your name also. Fine. But yes, it creates a threat to independence. If suppose, let's say you were the auditor of the Reliance Limited. Got it. Why, sir? Because now you are holding the shares of a Reliance Limited. Not allowed. Yes, sir. You need to take the safeguard for such conditions like this. Obviously, sell shares hand to end so that threat is eliminated. Got it? A very tricky case. A very tricky case. You will be remembering this example. This is a same example taken by ICI in their test your knowledge questions. Got it? Kya? Got it, got it. Are you following? This is the basic safeguard to independence. Safeguard against threat to independence. Fine, sir. Then we have covered ethics, we have covered independence, we have covered professional skepticism topic. Now let's focus. These are the tricky cases. Now let's focus on essay 210 part. Essay 210 part, agreeing the terms of audit engagement. Let me open audit decoder book also. Yes, people, now let's revise essay 210, agreeing the terms of audit engagement. So basically a very easy standard, think logically and you will be able to retain all the concept nicely. So engagement letter, basically auditor and client has to agreed on terms, and these terms and conditions are written in engagement letter. Basically, auditor prepares engagement letter, sends to client. Fine. It should always be in writing, basically to avoid misunderstanding between auditor and management. Fine. One MCQ can be asked relating to this area. Auditor sends engagement letter to client. Always remember. Auditor sends engagement letter to client. Always remember. This is very important. Then, what has to be included in engagement letter? Basically, there are 5 points that you need to remember. First is objective and scope of audit of financial statement. What is objective of audit? What are the areas? What is the basically scope of audit? Is it audit related to holding company or subsidiaries, associate branches, etc.? So objective and scope of audit of financial statement. Then 2 points are related to auditor, 2 points are related to management. Focus. 2 points are related to auditor, 2 points are related to management. So 2 points are related to auditor are responsibility of the management and reference to the expected form and content of the audit report. Fine. You will be thinking, sir, if reference to form, expected form and content of audit report is given, that means audit report is already clear that this will be the format and content. Statement is also given. Plus a statement that circumstances may lead to different form and content. Got it. So 2 points are related to auditor, responsibility of the auditor, and expected reference to the expected form and content of the audit report. Then 2 points are related to management, responsibility of the management, and identification of the applicable FRF. Obviously, what applicable FRF is entity needs to follow has to be identified by the management only. Whether they need to follow AS, whether they need to do accounting as per India's, etc. So 5 points are there in engagement letter. What are the 5 points? So first, objective and scope of audit of financial statement. 2 points, responsibility of the auditor, reference to the expected form and content of the audit report. Responsibility of the management, identification of the applicable FRF. Got it. Now these 2 points are basically preconditions of audit. Preconditions of audit. Basically, these 2 points are preconditions of the audit. We will be discussing detail what are the responsibilities of the management. These 2 points, if not satisfied, if these 2 points are not satisfied, auditor will not accept the audit. So first, let us discuss responsibility of the management. Basically, responsibility of the management. Tell me, who has the ultimate responsibility for preparation and presentation of financial statement? Some management. So this is the first responsibility. Preparation, presentation of financial statement as per applicable FRF. Second, to prepare and present financial statement, management devise internal control. So this is their second responsibility. And third, provide auditor with. Obviously, if auditor wants to do audit, management has to provide them information data. So that is their third responsibility. Access to provide auditor with access to all information management is aware necessary for preparation presentation of financial statement. Auditor may ask for additional and information they need to give with relation to the auditor. With relation to audit, auditor may ask for additional information. And third, unrestricted access to the person within the entity whom auditor can ask information. For example, sales head, there should be unrestricted access to sales head relating to, because auditor wants to inquire about wants to take information about sales, then sales head is the responsible person. Unrestricted access. Got it. Got it. So tell me the responsibility of the management. Tell me the responsibility of the management. Sir, preparation presentation of financial statement as per applicable FRF. Devising internal control necessary for preparation presentation of financial statement as per applicable FRF. And there were 3 points. 2 points. Third point is 3 sub point. Providing auditor with access to all information, all relevant information relevant to the financial reporting. Providing additional information as auditor may request in relation with the audit, and unrestricted access to the person within the entity from which audit evidence can be obtained by the auditor. Got it, sir? Got it. And identification of applicable FRF has to be done by the management. Now I am connecting everything. We know in objective in basically key areas to be included. There were 2 points related to management, responsibility of the management, identification of the applicable FRF. These are nothing but a preconditions of the audit. Responsibility of the management, identification of the applicable FRF. Auditor make sure that both these conditions are satisfied. Both these conditions are satisfied. If conditions are not satisfied, he will not accept the audit. So, relating to responsibility of the management, always write like this: auditor obtain agreement from management that they acknowledge and understand their responsibility. You know the responsibilities, 3 point and third point as 3 sub-point. Then identification of applicable FRF. Auditor determine whether the identified applicable FRF is acceptable. Management has to do the work of identification of applicable FRF. Auditor determine whether this identified applicable FRF is acceptable. Kya? Got it? Kya? If both the conditions are satisfied, then only auditor will accept the audit engagement, otherwise not. Sir, any of the condition violate, don't accept. Both the condition need to be satisfied, and these are called what? Preconditions of the audit. How auditor will determine that preconditions are satisfied? For responsibility of the management, he will obtain acknowledge from a written agreement from management that they acknowledge their responsibility. You know the responsibility part. Then he will determine whether identified applicable FRF is acceptable. If precondition is not satisfied, don't accept. If preconditions is not satisfied, don't accept. Simply communicate with management and don't accept the engagement unless these preconditions are satisfied. That is the basic concept. Got it? Kya? Got it? Kya? Are you able to connect different topics all together? Very important. Very important, my dear people. Then let's talk about next topic: recurring audit. So, what exactly is recurring audit? Let's say concept is like this. There is a two case: recurring audit and initial audit engagement. For initial audit, recurring and initial audit engagement, difference is like this: previous year, current year, same auditor. Initial audit engagement, this is basically new audit, new auditor basically. Simply, previous auditor, previous year, there may be a case where no audit was conducted or there was some predecessor auditor. You are the new auditor. Simply, if you are the new auditor, obviously engagement letter will be there. Without engagement letter, you cannot do audit. So this is not a discussion. This is a basic common sense. We are talking about SA 210. About this only engagement letter before accepting the audit, engagement letter has to be done. Got it? Question arises of recurring audit. Previous year you were the auditor, current year you are the auditor. Previous year you have drafted engagement letter, send it to your client, everything is done. Do auditor need to again send engagement letter to client? Question is this: are you following the concept? If you think logically, it will not be mandatory. Auditor has to take a professional judgment whether they need to remind client about their terms and conditions. Got it? So SA says it is not mandatory. It is not mandatory, but in following circumstances, remind client about their terms or revise your engagement letter. There may be a special circumstances where auditor may need to revise engagement letter or to remind client about the engagement letter. Just simply send engagement letter again. So what are the conditions? There is huge changes, significant changes in ownership, significant change in nature or size of the business. Significant word is important. Change of senior management, change of applicable FRF, change in legal or regulatory environment, change in other reporting requirement. Can you remember these basic points? Change. 3 points are related to basically management business. Change in senior management. What is such? Significant change in ownership, significant change in nature or size of the business. Significant word has a relevance here. Then change in FRF, change in other legal and reporting requirement. Fine. Change in other reporting requirement. Fine, sir. If there is any misunderstanding between the management and the auditor, obviously misunderstanding, to remove that misunderstanding, obviously revise the engagement letter. And if you want to revise or add special terms of audit engagement, a particular term, you can do with that. Fine, fine. These are 8 points. Remember at least 5 to 6 points to score full out of full. So how can we remember? 3 points were related to management, 3 points were related to some reporting. Change in senior management, change in significant change in nature or size of the business, then significant change in ownership, change in applicable FRF, change in legal and regulatory requirement, change in other reporting requirement. If there is any misunderstanding between the auditor and the client, change. Got it, got it, got it, got it, got it. Are you following this? Are you following this? Very, very, very easy, very basic standard. Got it? Done, sir? Clarity? Yes, sir. Then, last topic, acceptance of change in terms of audit engagement. Very important topic, last topic of our essay 210, and your essay 210 will be done. So, acceptance of changes in terms of audit engagement. There is a special case where entity, your client, has requested auditor to change the terms of audit engagement. Auditor may accept if reasonable justification exists. Fine. So there are generally three cases where the client may request auditor to change the terms of audit engagement. The three cases are: change in circumstances affecting the need for the services. For example, let's say client wanted a loan from a bank, and bank demanded, sir, please get your financial statement audited. But now client no longer required that loan. Then financial statement audit conditions were not compulsory, assuming. So they requested for change. Is this allowed? Yes. Change in circumstances affecting the need for service looks reasonable. There is a misunderstanding as to the nature of the audit as originally requested. Client got misunderstood about the nature of the audit. He misunderstood the nature of audit as investigation. This again seems to be a reasonable justification. Then, case A, case B, change in circumstances affecting the need for the services, misunderstanding as to the nature of the audit as originally requested. These case number A and B, auditor may consider reasonable justification. Fine. But focus on the case number C. There is a restriction on the scope of audit engagement imposed by management or other circumstances. For example, let's say auditor wants to send external confirmation request to debtor. Management was restricting them. So there may be a case where auditor may wants to qualify the opinion because sufficient appropriate audit evidence was not obtained. Here management requested auditor, sir, let's change the terms of audit engagement. Let's change from audit to review. This is a proper case. This is a proper case of CA Deepa. Let me give you context. Deepa Limited. Yes, Deepa Limited. So what was the case? Management imposed limitation from sending external confirmation. Auditor was not able to obtain sufficient appropriate audit evidence. He wants to qualify. To avoid qualification, the requested auditor, sir, please let's change the terms of audit engagement. Is this valid? Request seems to be unjustifiable. Yes. So this is a point. If a particular request is made by management, because of this, auditor particularly considered implication of restriction on the scope of audit engagement. Case number A, case number B, yes, reasonable justification can be there. Auditor may consider reasonable justification, but he needs to particularly consider the implication of restriction on the scope of audit engagement. Fine. Change may not to be considered acceptable if it seems to be incorrect, incomplete, or unjustified. Fine. Fine. This is the same example which I have taken earlier, to explain the whole concept. So remember the three cases. Remember the three cases, sir. What are the three cases? Sir, three cases are, two cases were seems to be reasonably justified. One case is auditor needs to particularly consider the particular implications of that restriction on the scope of the audit engagement. What are those? Case number A, case number B, sir. Change in circumstances affecting the need for the services and misunderstanding as to the nature of the audit as originally requested. Got it, yes, sir? Got it. Got it, got it, got it. Can I move forward? Yes, sir. Then, second, special case, when you are let's say, moving towards audit to review, changing from audit to review or audit to related services, then some criteria, some specific measures auditor needs to take into consideration. Obviously, he needs to determine whether reasonable justification exists. He needs to consider his professional legal responsibilities. Fine. If suppose reasonable justification exists, change may be accepted. Now let's talk about this. 1/4/2025, 30/6/2025. Here, till here, audit was done, and now it has been shifted to revise engagement. Got it? Sir, old work, if relevant, auditor can use this. But for new work, obviously, he will be doing new work as per the revise engagement. And obviously, engagement letter will be redrafted. Understood? Sir, can a practitioner auditor use old engagement work? Yes, if relevant. Sir, new procedures, new work has to be done as per the revised engagement. Fine, sir. Fine. But special consideration need to be taken care when shift is from audit to related services. So why? Because audit is a assurance engagement, related services is a non-assurance engagement. Problem gets here. You should not confuse user. That is the basic objective. So basically, if you are moving towards audit to related services, basically assurance services to the non-assurance services, make sure you are not including any reference of original audit engagement. Don't confuse user, because user will be getting confused between audit, related, assurance, non-assurance. Don't confuse user. Don't give any reference to original audit engagement. Don't confuse user, or any procedure performed in the original audit engagement. Don't confuse user. However, as you may remember, related services has two cases: agreed upon procedure and compilation engagement. In CA final, you will be seeing that agreed upon procedure, only audit, nature of audit procedures are applied, like inquiry, inspection, etc. So if you have given reference of audit procedure in case of agreed upon procedure, it is allowed. It is allowed. This is again an exception. So what is the exact case? When you are shifting from audit to related services, don't confuse user. Don't give any reference to the original audit engagement. Don't give any reference to the original audit procedures. Fine, except when shift is audit to the audit agreed upon. Audit is when shift is audit to agreed upon procedure. You can mention about the audit procedures. Fine, fine. So reason being, reference to procedure is a normal part here. You will be understanding this in CA final basically. Got it, kya? Got it, sir. Done, sir. Right, sir. Then let's focus on non-agreement to change in terms of audit engagement. Suppose management requested you, but auditor don't accept. Auditor was not willing to accept the change in terms of audit engagement. But management was forcing auditor, sir, you have to change, you have to accept the change, you have to accept the request for change. Auditor said, no, sir, I am not ready. I am not ready, sir. Management refuses auditor to, management didn't allow auditor to work on original terms. They were specifically very rigid, sir, work on new terms. Auditor don't have any option. If you don't have any options, you are not allowed to work on original terms, and you are not interested in doing work as per the new terms. Obviously, what is your options? What are the options left? So withdraw. Simply withdraw from the audit engagement, and if you are withdrawing, simply determine if there is any obligation, either contractually or legally, to report to TCWG management or any other regulator. As simple as that. As simple as that. Got it, kya? Got it. Simple. If you don't have any option, withdraw. And when you are withdrawing, just determine your obligation, professional legal responsibilities to report to TCWG. management and other regulators of the reason for the withdrawal. Are we done? Are we done? Yes, sir. So we have covered chapter number 11 full. Yes, sir. Uh, I will be taking separate revision for SA 220 and SQC1. We'll be taking separate revision for SA 220 and SQC1. Fine. So this is all about chapter number 11. We have covered independence, we have covered ethics, we have covered professional skepticism, SA 210 altogether is complete. SQC1 and SA 220 I will be uploading separate video. I will be making you revise separately. Fine. So this is all about chapter number 9. I hope it makes sense to you. It was helpful to you. If you find any problem, do inform me, do connect with me. Chalo. Thank you so much. Thank you. Yes, people, let's start revision for chapter number 2, audit planning strategy and audit program. Make sure you are liking this video so that it reaches to maximum students. Yes, people. So this chapter is basically bifurcated into two parts. Part number 1, SA 300, planning and audit of financial statement, and part number 2, audit program. First, we will be doing SA 300. Focus on this chart. Planning, there are two bifurcation: preliminary engagement activities and second is planning activities. In chapter number 2, this will be our special focused area. Visualize this planning. We have bifurcated two things: preliminary engagement activities and planning activities. Then preliminary engagement activities, whatever you have covered in chapter number 11, ethics and terms of audit engagement, same is getting repeated. Establishing understanding of terms of engagement as per SA 210, acceptance and continuance of client relationship, compliance with ethical requirement plus independence. These are covered in SQC1, SA 220. Yes, sir. So these are the preliminary engagement activities. Once you are done with preliminary engagement activity, move towards the planning activity. Focus here. First, when you are doing the planning activities, first establish overall audit strategy and then go for development of audit plan. Again, I'm repeating, establish overall audit strategy, then go for development of audit plan. This is a basic broad overview of SA 300. Got it? Now we will be doing part by part. So first, let's assume that you are a proposed auditor of Reliance Limited, and question is, how will you proceed? To first remember chapter number 11. Chapter number 11, preliminary engagement activity. This part. First remember preliminary engagement activities. Perform procedures regarding the continuance of relationship. Basically, all knowledge of chapter number 11. Firm should obtain vital information about the client and evaluate three things. ICC. Sir, integrity of client. Then competence and capabilities, including time, resources of engagement team, and compliance with ethical requirement. So evaluate three things: ICC, integrity of your client; competence of engagement team, including capabilities, time and resources; and compliance with the ethical requirement. Let me give you one case study. Suppose a proposed client is engaged in money laundering activities, is engaged in terrorism activity. Will you accept the proposal? Answer is no, because you have a serious doubt on the integrity of the management. Fine. Second is establishing understanding of terms of engagement as repeated by SA 210. SA 210 says there should be clear cut engagement terms between auditor and client. Auditor prepares engagement letter, sends it to the client. Why engagement letter requirement is there? Just to avoid any misunderstanding. Got it? So these are all covered in chapter number 11. Then evaluating compliance with ethical requirement, including independence. 3 points: independence, threat to independence, safeguard. Ultimately, again, you need to write that knowledge only. So give reference of independence, give reference of professional skepticism, being alert to the condition, critical examination of audit evidence, having a questioning mind. Give reference to 5 principles of ethics. What are those 5 principles? CPIPO, confidentiality, professional competence and due care, integrity, professional behavior, objectivity. Got it, sir? So how you can develop your answer here? Or use chapter number 11 knowledge, reference of independence, professional skepticism, 5 principles of ethics. Got it? Then, very important, writing practice of this question. Ultimately, engagement partner has to form conclusions that we are complying with the independence requirement. So in order to form the conclusion, what he do? He obtain relevant information from the client to identify and evaluate circumstances and relationship that can create threat to independence. First of all, he obtains information to just identify and evaluate what are the circumstances, what are the relationships that can create threat to independence. Fine. Then, as per SQC1, policies and procedure need to be maintained. He evaluate information on identified breaches on firm independence policies and procedure to identify threat to independence. Fine. And finally, ultimately, talk about the safeguard. Take appropriate action, eliminate such threat, or try to reduce threat at an acceptable level, or withdraw from the audit engagement if permitted. Got it? So what you will be doing, you will be obtaining information about the client to evaluate circumstances and relationship that can create threat. Firm develop policies and procedures. If there are any breaches on policies and procedure, evaluate that can and evaluate the threat on independence. And finally, take the appropriate safeguard. Eliminate threat, reduce them to an acceptable level, or withdraw from the audit engagement. Got it? So these 3 topics were already covered in our chapter number 11. Chapter number 11. This is just a repetition part. Our main focus will be on the planning activity. Once auditor passed this test, he goes for planning activities. He goes for planning activities, and here is the planning activity. So focus here. Planning activities. Auditor first establish overall audit strategy, and then he go for development of overall audit plan. That is the basic criteria. First you do this, then go for development of audit plan. Strategy focus on 3 things: STD, scope, timing, direction of the audit, plus resources. How particular engagement team deploy their resources. That is the basic concept: scope, timing, direction plus resources. Got it? First we will be establishing strategy, and then we will be going for development of audit plan. Focus here. So establishing overall audit strategy, it sets the scope, timing, direction of audit that basically guides the development of audit plan. This was our part A, and after you establish the overall audit strategy, go for development of audit plan. So what exactly is the scope, timing, direction of the audit? Let me give you some basic overview. Scope, basically what to be covered. For example, if is this the audit only of a particular company, or subsidiaries, associate need to be covered, branches need to be covered. So basically boundaries of the audit. Scope of audit is basically boundaries of the audit. Timing, whether auditor needs to do audit on the basis on quarterly, interim basis, quarterly, or directly let's say year ending. So whether at interim stage or year end, depending upon the risk, basically auditor decides that how much they need to give the time. Direction, on how team members need to be directed. Obviously a high risky area, appropriate experienced staff will be delegated a particular work. Fine. Plus resources ka tadka, basically CA firm people, engagement team members. Fine. So this is a basic overview. Establishing overall audit strategy, it sets the scope, timing, direction of audit that guides the development of audit plan. First you set the scope, timing, direction, so that ultimately you can develop the audit plan. Are you following? Got it. Then there is one question: benefits of establishing strategy. What is benefits of establishing a strategy? Or question can be like this: process of establishing overall audit strategy helps in marshalling audit team resources. How strategy helps in marshalling team resources? For example, there are 4 points specifically. Resources, it helps in tackling resources to deploy for specific audit areas. For example, if it is a high risky areas, obviously you will be employing a more competent, more experienced audit staff, right? Amount of resources to allocate to specific audit areas, a particular revenue area, how much resources need to be applied, need to be deployed for that particular area. Got it? You are doing what? Marshalling resources. Then, third, when these resources are to be deployed, are resources to be deployed at interim stage or at cutoff date, year ending dates? And how such resources are managed, direct, supervised? Basically, hierarchies are there: junior, senior, manager, senior manager, partner. So basically, how such resources are directed, supervised, managed, team meetings are called, briefing, debriefing, how partner and manager review, how engagement quality control reviewer does the review of significant matter. That is the basic concept. So establishing overall audit strategy helps in marshalling team resources. In There are 4 points. First, resources to deploy for specific audit areas. For example, if it is a particularly high risky area, obviously you will be deploying an experienced staff. Amount of resources to be deployed, when these resources to be deployed, either at interim stage or at cutoff date, and how such resources are directed, supervised, review. For example, when team briefing and debriefing are expected to held, partner review, manager review, engagement quality control reviewer. Got it? Got it? 4 marks questions can be directly targeted from this area. Fine. Then focus here. As you have covered the strategy part, it focus on scope, timing, direction, resources. So basically, there is one topic of factors to be taken for establishing audit strategy. Here, auditor is establishing overall audit strategy, ultimately to marshal their resources. So he focus on particular aspects: scope, timing, direction, resources. And there is one more point: preliminary engagement activities. How ICI targets? ICI gives you the subheading, and you need to give the examples of that particular point. Fine. So repeat: resource, repeat: STD plus resources, scope, timing, direction, resources. And there is one additional point of result of preliminary engagement activities. Here we need to memorize these examples to score 4 out of 4 marks. So first point is identify characteristic of the engagement that define its scope. Basically you are setting the boundaries of the audit. Yes sir. So first understand that entity, first understand the characteristic of the engagement that define its scope. So focus on the entity part. Applicable FRF, you can focus whether entity is following AS or NDS, and applicable FRF. Nature of business segment to be audited, whether a particular company needs to get audited or their subsidiary holding branches needs to get audited. Fine. So 2 points are related to entity. Then you can focus on industry. For example, in India, banking, or when you are doing audit of banks, you need to do a LFAR reporting. So is there any industry specific reporting requirement? So the 3 points are related to entity and their industry. For what you are doing, you are identifying the characteristic of the engagement so that you are drawing the boundaries. First, applicable FRF of the entity, nature of business segment to be audited, including the need for specialized knowledge. Third, industry specific reporting requirement, for example, LFAR in case of banks. And fourth, expected use of audit evidence obtained in the previous audit. For example, you were only the previous auditor and you are the current auditor. Can you use the audit evidence obtained in the previous audit in the current year? That auditor needs to determine. Fine. 4 points are there. This is very important for your exam. Generally, institute target any of the subpoint and challenge students to give 4 points or 5 points. Fine. Repeat with me. 4 points are there to identify the characteristic of the engagement, sir. And 2 points were related to entity, applicable FRF, nature of business segment to be audited, including the need for specialized knowledge. 1 point was industry specific reporting requirement, and 4th point was expected use of audit evidence to be obtained as a previous expected use of audit evidence obtained in basically previous audit. Fine, sir. So first point was related to scope. Second point is related to timing of the audit. Basically, what you need to do, auditor, ascertain the reporting objective of the engagement. Ascertaining the reporting objective of the engagement to basically plan the timing of the audit, ultimately interim date or cutoff date. So basically understand the reporting objective of the entity and the nature of the communication requirement. So for understanding the reporting objective of the engagement, to plan the timing of the audit, you will be organizing the meeting, you will be discussing with the management. Basically these will be the points. So as how you can learn these 5 points, uh, topic is related to timing of the audit. So first example is entity timetable for reporting. Reliance timetable for reporting of audited financial statement to shareholders. First focus on that part. Entities timetable for reporting. Then organize meeting with management TCWG to discuss the nature, timing and extent of audit work with management. Have a cup of tea with management and TCWG and discuss the nature, timing and extent of audit work. Then again discuss. Sir, what? Discuss with management regarding the expected type and timing of the report to be issued. Meaning by at a particular date, auditor should issue audit report to the management. So discuss with management regarding the expected type and timing of the report. Discuss with management regarding the expected communication between both the parties. Expected communication on the status of the audit work throughout the engagement. So 4 pointers, very easy. First, you are ascertaining the time, you are planning the timing of the audit. So and plan first entities timetable for reporting. Fine. Then organize meeting with management TCWG to discuss the nature, time and extent of audit work. Fine. Then discuss what? Regarding expected type and timing of the report to be issued. Audit report basically. And expected communication on the status of audit work. Got it. In such big meetings, generally articles are not there. So partner, communicate with articles about expected nature. You can remember like this only. Expected nature and timing of the communication among the team members, including nature and timing of the team meeting, timing and review of work performed. Got it. Done, sir. Then third point is relating to direction. So basically auditor considered certain factors, take a professional judgment in deciding which factors are significant in directing engagement team efforts. So considered factors in professional judgment are significant in directing engagement team efforts. Fine. Obviously, visualize like this, or if a particular thing increases risk, engagement team members efforts are directed more. Simple logic is this. For example, there will be some changes, significant industry development such as changes in industry regulation, new reporting requirement, significant changes in FRF, entity shifted from accounting standard to Ind AS. Obviously the risk will be huge. Fine. Other significant recent developments such as changes in laws and regulation. Nirmala Tai comes and changes GST laws significantly to a particular industry. Obviously risk will be huge. So these can be the some factors. So what are the factors? Significant changes, significant industry development, significant changes in FRF, other significant recent developments such as changes in legal environment. And 4th point, volume of transactions, which may determine whether it is efficient for auditor to rely on internal controls. Obviously auditor tends to understand internal control, test internal control to ultimately determine the nature, time and extent of substantive procedures. Remember, so focus on this part, volume of transactions, which may determine whether it is efficient for the auditor to rely on the internal control. Got it. Obviously, if you auditor finds that internal controls are weak, he will deploy more time, he will deploy more experienced staff. If internal controls are strong, particularly less limited procedures can be applied. Got it. Got it, sir. Fourth point. Fourth point is related to result of preliminary engagement activities. Chapter number 11. Auditor, consider the result of preliminary engagement activity and if you have any knowledge gained on engagement performed earlier also. So basically these 2 points focus on maintaining professional skepticism. Engagement team member have an attitude of professional skepticism, maintain questioning mind, maintain professional skepticism, and consider previous audit result specifically relating to internal controls. For example, this we covered in SA 330, but as they have given the example, suppose you are the previous auditor, you are the current auditor. You checked internal control testing in previous year. If testing was okay, if result was satisfactory and there is no substantial change in controls, obviously you don't need to do testing of control again. You can directly jump to substantive procedures. ठीक है, this is connecting with SA 330, SA 330. So read this example. Result of previous audit that involve evaluating the operating effectiveness of an internal control, including the identified deficiencies, action taken to address. Fine. Result of previous audit that involve evaluating operating effectiveness of an internal control. And fifth point is related to ascertain the nature, time, and extent of resources necessary to perform the engagement. Very simple. It focus on the selection of engagement team. If it is a high risky area, high risk of material misstatement area, obviously experienced staff, a competent staff will be assigned. Resources will be deployed, maybe quarterly, half yearly also. Devotion of more time. Very basic point. Got it. So understand the thought process. Here, you have established overall audit strategy and then you go for development of audit plan. We have covered how this helps in marshalling team resources, first question. Then there are sub questions. S, T, D plus resources, sub points are there, plus result of preliminary engagement activities. Once you are done with this, go for development of audit plan. So basically development of audit plan focus on three aspects mainly. Planning of nature, timing and extent of RAP, FAP, other audit procedure. Planning of nature, timing, extent of RAP, planning the nature, timing, extent of FAP, planning the nature, timing, extent of other audit procedures. Fine. So we will be discussing this. These are extra gyan. Basically, I give in regular classes to connect everything: risk assessment procedure, further audit procedure. But as we are in the revision stage, I'm not focusing on this right now. I'm directly jumping to development of audit plan. So focus on this first line. Once audit strategy is established, audit plan can be developed to address various matters identified in overall audit strategy. As I have told earlier also, auditor first established the basic strategy and then he go for development of audit plan. Audit strategy established, audit plan can be developed to address various matters identified in overall audit strategy. Obviously, you need to have a good business knowledge to ultimately develop the audit plan. SA 300 states that auditors shall develop audit plan that include description of nature, timing and extent of 3 points are there of planned RAP, planned FAP, planned other audit procedure. Nature, timing and extent of planned RAP, planned FAP, planned other audit procedure. So what do you mean by nature? Nature simply means what audit procedure need to be applied. Timing, when to be applied, either at cutoff date or interim date, and extent, how much to be applied, basically focusing on audit sampling size. So can you connect these points? Very important for your exam. SA 300 states that auditors should include a description of nature, time and extent of planned RAP, planned FAP, planned audit, planned other audit procedures. Explain nature, timing and extent concept. What do you mean by nature? What type? Extent, when to be, and timing, when to be, and extent, how much work should be done. Fine. Then give the context of RAP and FAP. Generally what happens at the beginning phase of the audit, auditor plans RAP, perform RAP. Fine. Whatever the result is of RAP, after the evaluating the result of RAP, he performs FAP. Fine. So basically RAP is performed at the planning stage only. FAP is performed during the audit. So give overview of this. Planning of RAP occurs only in early stage of the audit process. Planning the nature, timing, and extent of further audit procedure obviously depend on the outcome of the RAP and is performed during the course of the audit. Got it. Got it. Got it. Got it. Audit plan is more detailed than the overall audit strategy. Fine. Very important topic. Very, very important topic. Done, sir. Let's repeat basic things. So you have these two boxes. Planning activity, establishing overall audit strategy. Establishing overall audit strategy, we focus on the STD, scope, timing, direction of the audit. Scope, timing, direction plus resources and result of preliminary engagement activities. These strategic, this establishing helps in marshalling team resources. Once you are done with this, you go for development of overall audit plan, which focus on three aspects: plan, nature, timing, and extent of RAP, FAP, and other audit procedure. Explain what is nature, what type of audit procedure, timing, when, extent, how much. Fine. NTE, got it. And obviously give the context when RAP to be performed, when FAP to be performed. That is the basic concept of audit planning. Fine, sir. Are you following me? Are you following me, my dear people? Done, sir. Then let's talk about very basic topic, nature of planning. This question was asked in May 24, 4 marks. Nature of planning, very easy topic, very, very easy topic. If question comes from this topic, actually a bonus question. So nature of planning. So what standards try to say, basically planning is not a separate or distinct phase of audit. It is a continual repetitive process. It is not like that you have to do planning at the start of the audit. No, not like that. Planning is a continuous repetitive process. And standard extend its discussion by saying that planning begins with the completion of the previous audit and continues till the completion of the current audit engagement. So what does this mean? For example, let's say financial year 24-25 or 25-26, 26-27, 25th-26 audit was completed here. Fine. uh, this is, let's say, starting. Fine. And this is whole 25-26. So once this audit gets completed, planning automatically start for next year and it continues till its completion of the current year audit. So what does this mean? It begins with the completion of the previous audit. Whenever your previous auditor is completed, you start your planning of the current audit and it continues till the completion of the current audit engagement. It is a continual repetitive process. It is not a one-time process. It is a continuous repetitive process. Got it. So they further extended the discussion relating to when, as you know, we need to plan about the further audit procedure also. So standards say, yes, it is a continuous audit process. Agreed. But standard also try to explain that when you are going for planning of further audit procedures, particular things need to be done. Particular checklists need to be done. Meaning, planning, however, consideration of timing of certain activities or procedure that need to be completed before the performance of the further audit procedure. Fine. So before performing a further audit procedure, certain things need to be done, and these are done at the beginning of the audit. Basically, for example, materiality determination. This is done at the beginning of the audit. Whether we need to involve, whether engagement team member need to involve any expert. Decision need to be taken at the early stage. Fine. Obviously, auditor obtains understanding of legal and regulatory framework and how entities complying with that framework. RAP had to be done at the beginning of the audit, right, sir? In risk assessment procedure, there are 4 procedures: analytical procedure, inspection, inquiry, observation, right, sir? So they give bifurcated like this: analytical procedure to be performed as RAP and other RAP. do you mean by other RAP? Inquiry, inspection, and observation. Basically one point only. It could be written as audit procedures performed as RAP. That covers both the points. Got it? So before performance of further audit procedure, basic things need to be taken care of. Materiality is determined at the beginning stage. Determination of involvement of expert. Perform RAP. RAP, 2 points get bifurcated. Analytical procedures to be performed as RAP and other RAP. Don't use short form in exam, obviously. Obtain general understanding of the legal and regulatory framework and applicable to the entity and how entity is complying with that framework. Got it. Got it. That is very, very important and very easy question. But just you need to have a good conceptual understanding that before obviously performance of further audit procedures, certain things need to be taken care of. Got it? Done, sir? Done? Then let's talk about change in planning decisions during the course of audit. Sir, you have established strategy, you have established audit planning. Can we revise them? Answer is yes. Answer is yes. Obviously, you can revise audit plan, audit strategy if circumstances demand. For example, there is change in condition or due to the result of the unexpected event or audit evidence, whatever audit evidence you have obtained from the result of audit procedure. If you think that yes, there may be a case where auditor needs to revise audit planning, audit strategy, revise. Fine. So due to the result of the unexpected event, due to the change in the condition, due to the audit evidence obtained from the result of audit procedure, auditor may change audit strategy and audit plan. And obviously, if he is revising audit strategy, he is revising audit plan. There may be a change in nature, time, and extent of further audit procedure based on the revised consideration of RAP. If you are revising planning, if you are revising strategy, you may be revising RAP also. And depending upon the result of the RAP, revise FAP. Got it? This may be case when auditor obtains information that is differing significantly from earlier obtained information. Because, for example, in earlier stages, auditor obtained understanding of the entity. Fine. As the audit progressed, understanding changed drastically. So he may needs to revise his audit strategy, audit planning. Got it? So remember these keywords. Maybe due to the result of change in condition, unexpected event, audit evidence obtained from the result of audit procedure, revise audit strategy, revise audit plan, revise FAP, revise RAP. Got it. Got it. Done, sir. Then what are the benefits of planning? Basically, if you are planning, if you are rightly planning, that means you will be doing selection of engagement team member appropriately. So 2 points are related to engagement team members. What? It helps in selection of engagement team members with appropriate competence and capabilities. For example, you find that this is a particular audit of banks. So you will be deploying staff who have the good knowledge of audit of banks earlier. Fine. So facilitate direction and supervision of team, help in selection of engagement team member with appropriate competence and capabilities. So this sets the basic accountability, and obviously review work need to be done. Facilitating direction plus supervision of team and review of their work. 2 points are related to engagement team members. So if you appointed good persons, fine, they will be doing effective, efficient audit. They will be identifying and resolving potential problem on a timely basis, and they will be devoting appropriate attention to the important areas of the audit. So they will be doing properly organized audit, effective, efficient audit. Obviously a specific risky area will be specific. If it is a specific risky area, obviously more devotion of time will be there. So devote appropriate attention to important areas of the audit. For example, related party transaction, revenue, important areas, devote appropriate attention. Identify and resolve potential problem on a timely basis, and helps in coordination of the work done by the auditors of components and other expert. Fine, 6 points are there. You need to remember 4 to 5 points correctly. 2 points were related to engagement team members. If you are selecting properly, 1 point can be related to properly organized audit to do in an effective and efficient manner. Got it? Focus on important aspect of the entity. Identify and resolve potential problem on a timely basis. That is the concept of benefit of planning. Got it. Right, sir. Important notes. Generally, key engagement team members are involved in planning of the audit. Fine. Uh, Sir, can auditor discuss a certain aspect of plan with the management? Yes, allowed. But make sure that effectiveness of audit need not to be compromised. So you can discuss the certain aspect of the audit plan with the entity management, but make sure that nothing has been compromised. Your audit is not getting compromised. Maintain basic independence, ethical requirement, comply with the ethical requirement. Make sure your independence is not compromising, your audit effectiveness is not getting compromised. Otherwise, it is allowed, not an issue. Fine, sir. This is a basic important note. Clear, sir. Done. Can I move forward? Yes, sir. Then there is one question of relationship between audit strategy and audit planning. We have already interlinked this topic. Just a repetitive audit strategy, audit planning topics, audit planning lines are there. For example, you know this point. Audit planning is more detailed than overall audit strategy. Include nature, time, and extent of audit procedure to be performed. Planning for audit procedure takes place over a course of time. This we have covered in audit planning. Right, sir. Audit strategy definition. It sets the scope, timing, direction of the audit, and audit plan describe how audit strategy need to be implemented. Fine, sir. These both are very closely interlinked, are not necessarily discrete or sequential process, but are closely related, since change in one can result in change in other. And basically, audit strategy basically gives the broad overview to the audit. Audit plan addresses specific particular matters, various matter identified in the overall audit strategy. Fine. So basically, audit strategy is a broad indicator, is a broad overall approach to the audit. An audit plan addresses a specific matters identified in overall audit strategy. Got it? Relationship between audit strategy and audit planning. Just read once and you will be good to go. Give 2 minutes, read, and you will be good to go. Fine. Fine. Done, sir. Then, very easy topic. Factors on which nature, timing, and extent of direction, supervision of team members, and review of the work. Basically, auditor consider certain factors in deciding how much I need to direct my resources, how much I need to supervise their work, how much I need to review my work. Obviously, there are 4 points. I have one mnemonic, if you can understand. Psycho insan, psych. That's the wrong number. साइको इंसान कोकोकोला पी के रिस्की एरिया में गया. साइको इंसान कोकोकोला पी के रिस्की एरिया में गया. If you know little bit Hindi, that will be enough for you. So 4 points are there. If I can connect with the mnemonic: psycho, size and complexity; coca-cola, capabilities and competence; risky, assess risk of material misstatement; area of the audit. This is how you can learn the 4 point. Let me explain briefly. So size and complexity of the audit. For example, let's say if you are doing audit of Reliance Limited and you are doing audit of, let's say, a very small entity, obviously more direction, supervision, and review need to be done on more complex entity. First point. Area of the audit: risky area, more supervision, direction. Assess risk of material misstatement: high risk of material misstatement, obviously more supervision. And capabilities and competence of the team member. If a particular person is capable, competent enough, obviously less review will need to be taken care of. But for a junior article, obviously, whenever you will be going for your articleship in first year, there will be hell lot of supervision and review of your work, because you will be very less competent. So sorry, you are calling us competent. Obviously you will be getting an exposure of articleship as you will be gaining a lot of experience. Damn level of audit understanding, practical doing. As everyone knows, skills get developed with the experience. So whenever you will be deployed in your first year article, there will be hell lot of direction, supervision, review of your work. So because you will be treated as less capable person that time. Got it? So capabilities and competence of team members, psycho, size and complexity, area of the audit, assess risk of material misstatement. These are the 4 points. Got it. Are we done? Can I move forward? Yes, sir. Then this is the last topic. then we will be moving towards the audit program topic. Very miscellaneous topic, documentation of audit planning. Documentation of audit planning, basically, what do you mean by documentation? Record of audit planning. So you have to record strategy, you have to record audit plan, and if you are making any revision in audit strategy and audit plan, make sure you are recording the reasons for the change in reasons for the revision in audit strategy and audit plan. So basically, whatever you have knowledge about the audit plan, audit strategy, write that knowledge with the language record, record, record. That's it. What is audit documentation? Recording. So whatever is the audit plan, whatever is the audit strategy you have understood, record, record, record. That's it. So for example, audit plan, record of plan, nature, timing, extent of RAP, FAP, other audit procedure. Record of proper planning of audit procedure that can be reviewed and approved prior to their performance. So what do you mean by overall audit strategy? Basically, it is a record of key decisions considered necessary to properly plan the audit to communicate significant matter to the engagement team. And if there are any significant changes, whatever may be the reason, record them. So documentation explain why changes were made, also reflect appropriate response to significant changes occurring during the audit. Got it, got it, got it. This is a miscellaneous point. Just have a good reading for 1 minute and you will be good to go. Documentation. Record, 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 record. Fine. Done, sir. Done, 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 done. This is our chapter number 2, audit planning concept. Now we will be moving towards audit program. So take 5 minutes break and then move towards audit program. Or you can simply give 30-40 minutes, revise whole topic till chapter number 2, whatever we have covered, and then go with audit program discussion, whatever suits you. Yes, people, now let's discuss audit program, part 2 of chapter number 2. What exactly is audit program? Basically, it is a planned of applying set of procedures to achieve a particular objective. At the planning stage, auditor design an audit program. Obviously, he takes understanding of the entity, its operation, internal control, then design audit program. A basic template, a set of audit procedure designed to designed to achieve a particular objective. So here, assistant need to be very open-minded. He cannot simply just follow the audit program. He need to be very open-minded. For example, auditor understand the nature, size and composition of the business, understand the internal control, understand the given scope of work, then design the standard audit program. Design the standard audit program. Obviously, during the course of audit, auditor, article assistant, please have an open mind. You can tailor your audit program, audit procedures as per the given circumstances. There may be a case where some procedures were irrelevant for the purpose of your audit. Delete them. Be open-minded, be very open-minded. You can modify, you can tailor your audit procedures as per the need. You can delete, you can discard audit procedure, you can add audit procedure as demanded by the circumstances. Assistant, article assistant, whatever the significant matter you identify during the audit, bring to the notice of the senior or partner. Find assistant to keep an open-minded. Sir, another question. Sir, can same audit program be used for different entities like HDFC Bank and let's say Airtel? Obviously, answer is no. Answer is no. So reason being, business vary in nature, size and composition. Work which is suitable for one business may not be suitable for other. It also depends on efficiency and operation of internal control and exact nature of services to be rendered by the auditor. These are certain factors which auditor considered when designing audit program, when deciding whether the same audit program can be used for other entity. Take an example of HDFC Airtel. Business vary in nature, size and composition. Their internal controls are totally different. Nature of services rendered can be different. So obviously work suitable for one business may not be suitable for other. Got it? Clear? Very easy. Yes, sir. Then, is there any need of periodic review of audit program? Answer is yes. Business changes, internal control changes. If you are not updating your business knowledge and not updating your audit program, simply you will be using obsolete audit program. Obsolete audit program meaning inappropriate audit procedures. It can lead to legal claims. Fine. Loss of reputations. So obviously periodic review is mandatory. Periodic review is mandatory. because business changes, dynamics changes, circumstances changes. So periodic review to assess whether same continues to be adequate for obtaining required knowledge and evidence about the transaction. If not done, updated business policy may not be done. Absolute audit program, legal issues. Utility can only be enhanced by keeping the track record of audit, by keeping updating audit program, reviewing internal control, client operations. Make sure that you are reviewing them continuously so that audit procedures are applied appropriately to achieve the particular objective. Fine, sir. Done, sir. Then there is one topic of construction of audit program. 7 points are there. Just remember 5 points. Basically, audit program, it is a written set of audit procedure that need to be applied. Fine. Now connect with the audit procedure point, audit evidence point, audit objective. 3 points you will be connecting with the three audit procedure, audit evidence, audit objective. One point will be considered possibilities of error also. And for example, sales and debtors are closely interlinked, so you can link them. So I'm making you remember these 7 points. Coordinate procedures for related item, considered all possibilities of error. Fine. Prepare a written audit program, setting audit procedure need to apply. अब remember audit procedure, audit evidence, audit objective point. Apply only relevant audit procedure in achieving audit objective. Determine evidence reasonably available. What is reasonably available? Auditor has to determine which evidence will be reasonably available and best suited to achieve the necessary satisfaction. I'd include audit objective for each area plus sufficient instructions for assistant. What I mean to say, connect points, remember at least 5 points out of 7. You will fetch 5 out of 5 marks. So what points you can remember? First, audit program is a written audit, it should be in written. Setting audit procedure need to apply. Then apply audit procedure as necessary in the circumstances to achieve the particular objective. Fine, sir. Determine best relevant audit evidence to be obtained. Fine. Include audit objective. Then connect sales and trade receivables, meaning considered coordinate procedures for related items. Considered all possibilities of error. Fine, sir. Fine. Done, sir. Then this is just an gyan. This is just a knowledge for you that a practical question can be asked relating to construction of audit program. Always remember construction of audit program, certain format is there. For example, name of the entity, previous year for which it has been prepared by, approved by, checked by, set of procedures, by whom, extent of check, etc. You don't need to learn procedures part exactly, because this question was related to sales. Question can be asked relating to purchase also, but you should know the format. 2 marks MCQ was asked in one of the attempt where they have given the particular format and ask what is this audit program. Fine. Done, sir. Done. Then there are two topics, advantages and disadvantages of the audit program. First, I am coming to disadvantages of the audit program. Basically, what happens, disadvantage of audit program, there may be a case where work become mechanical. When work become mechanical, when article assistant does not understand the objective of the particular task and just simply applying the procedure, it can get mechanical. Program often tend to get rigid. When it gets rigid, if absolute program is followed. Fine. Then 2 points are connected to inefficient assistant and efficient assistant. Inefficient assistant, whenever we will be reaching to them about their accountability, they will be taking shelter behind the audit program. That I have done whatever has been written in the audit program. They are not keeping open-minded basically. And efficient staff, obviously his motivation will get killed because everything will be written in the audit program. His motivation will tend to decrease. Hard and fast audit program may kill initiative of efficient and enterprising assistant. So there are four disadvantages are there. You can remember by connecting keywords. First, inefficient staff, efficient staff. Second, work may become mechanical. Why? Without understanding the objective, work may become rigid because following the obsolete audit program. Done, sir. Then there is one question relating to inner audit decoder book of Sanjana. Fine. Sanjana finds that there was some disadvantage of audit program. Let's say she gives suggestions that disadvantage of audit program can be tackled by. So how disadvantage can be eliminated by? Simply, first, supervision of the work carried out, imaginative supervision of the work carried out by the assistant. Now, partner, be very receptive attitude towards your assistant. They don't they don't get be in they don't live in fear that how should I communicate to our partners. Partner, please have a receptive attitude towards your assistant, and motivate them to think objectively, to bring significant matter in front of team. Motivate them. Fine. To encourage them to bring matter objectively and bring significant matter to the notice of the supervisor and supervisor or principal. Fine. Got it? That is the basic concept of how disadvantages can be eliminated by. Fine. And advantages part you will read on your own. Very easy. Advantages of audit program. Basically, it sets the accountability, dif- uh, responsibility is set. You can select assistant on the behalf of their on the basis of the capabilities. Give an overview of the audit work to be performed. You are not doing audit on the you are not following any mental plan, proper structured form. So just have a good reading of advantages of audit program and you will be good to go. So we have covered chapter number 2, audit program, audit strategy and audit program, beautifully. I think this has been covered very nicely. We have covered chapter number 1, we have covered chapter number 11, we have covered chapter number 6, and we have covered now chapter number 2. All the 4 chapters around weightages 35 marks. These chapters are very easy, very scoring, and automatically if one has a conceptual understanding, do active recalling. You can follow this revision session again if you would, if you have time. Just do active recalling of these topic, and you can easily touch up to 23 to 25 marks from these 35 marks, because questions are very easy and these topics are and these topics are very scoring. So follow the structure approach, have a good grip on these topics, and you will be very good to go. 35 marks we have covered in very less time. I hope this marathon was very helpful to you. This revision videos were very helpful to you. Make sure you are sharing with your friends, and do share in comment section whatever is your feedback, because this is the first time I have brought up something for my South Indian students who had a great demand. So please bring revision videos in English. And this is our first revision video. I hope you like it. Do share it with your friends and make sure you are commenting about and sharing your feedback. Thank you so much.